trustandwill.com.
Welcome back to Squawk Box. Elon Musk defended the dip in EV growth yesterday after reporting lower than expected earnings. Take a listen.
As people have seen, the EV adoption rate globally is under pressure, and a lot of other auto manufacturers are pulling back on EVs and pursuing plug-in hybrids instead. We believe this is not the right strategy, and electric vehicles will ultimately dominate the market.
Elon also announcing that Tesla would be starting production of new affordable EVs by early 2025. A lot of investors cheering that news. Joining us right now is John McNeil. He is a DVX Ventures CEO and a former Tesla president. Good morning to you.
Good morning.
So tell us how we're supposed to think about this, because I think a lot of investors were both looking at both the sales piece, which is the decline and what's happening to EVs. The bulls are saying this is great news that the lower priced vehicle may be coming. Unclear what the timeline really looks like, because robotaxis are also apparently part of this. And then there's a CapEx piece of this, which is how much money they're actually going to spend to do this. It seems like they're pulling back a little bit on some of their sort of big plans to sort of completely remake these factories, and are sort of taking a middle path in terms of using some of the facilities they already have. Is that a decent summary of what's happened on that call?
I think that's a decent summary. I think you had kind of two contrasts yesterday. You had the GM earnings before the market. You had the Tesla earnings after the market. GM did a triple beat, and they are getting through their production issues and now ramping EVs, which I think creates demand challenges for Tesla, because there's so many now EV alternatives coming to market. And so I think they are having to answer the pressure to have lower cost EVs.
Right.
At the same time, they're trying to move the story to autonomy and the longer term autonomous vehicle story.
For the investor though, today, who's thinking about Tesla, do you have to think about it? And I think he's made the case. You have to think about it as an autonomous vehicle company long term to capture the valuations of where even Tesla sits in terms of the stock price today.
Yeah, I think there's a little bit of, hey, look over here, when the core business is weak, let's recast a different story. And I think there's a little bit of that going on for sure, because their core business is weak, and they were straightforward about that. But I think, to support a valuation, you've got to believe in this recast into autonomy.
Okay, so straight up, do you believe it?
Well, I think there are already two companies that are doing driverless cars, and so there's a race where two are already out there.
Right.
And Tesla, if they can get there, would be the third. And I do believe that cars need to be autonomous. 10 years from now, you probably won't buy a car if it's not.
Okay, so that's 10 years from now, but the question is, given that there are already vehicles that, they have a totally different kind of rig, LiDAR, radar, lots of other kind of sensors. It's a very expensive product. I'm thinking of Cruise and the like, and Waymo.
Yeah.
Do you think that Tesla can do it, and do it with the tech stack that's already on the vehicle, which is to say that Elon has said repeatedly he wants to be able to do this whole thing with cameras and processing power?
Yeah, I think that's the big question. Like, we've been waiting since 2015 for the finish line to arrive, and the finish line keeps moving out and out and out. And people that work on this problem say, hey, we're 95% done, but the last 5% is like as big as the first 95%. And so where that finish line is when we finally get there, whether it's Tesla or others, I don't think anybody knows. But we're closer than we've been.
And in terms of these more affordable vehicles, do you think those will compete well against what you're seeing out of GM and what you're seeing out of these other car makers?
I think you need you've got to open the market, and the broad market is at the lower price. And so in a couple of months, you can buy a Chevy Equinox after the tax incentive. It's like $27,500 for a 300+ mile range car. That's a small SUV. And there are a number of those vehicles coming out, and I think that's going to be formidable competition. It's going to give the consumer a lot more choice.
Should we be more concerned, though, about the competition, or more concerned about the idea, even, that the EV adoption is not staying at pace, right? That's the sort of bigger overhang of the whole situation. Are people going to go to hybrids? Are they going to stick with combustion engines? What's really happening here?
I think, we all knew the first quarter was coming, and what happened in the first quarter was most of the manufacturers lost the tax incentive credit. That is now back. So I think we're going to see very different numbers coming out of the rest of the year. because it was a slow first quarter, because consumers are smart. They know if they wait a few weeks or a few months, they're going to get it.
Is it that if they wait, they'll get it, or is it just that this market doesn't work without government incentives?
I think if they, it's a little bit of both. Like you've got to make EVs affordable, and so the government's helping while the car manufacturers bring their prices down and their costs down, and those cost downs are happening. So I think when you have like a Chevy Bolt, and that's priced in the 20s, you've got a very viable car without tax incentives, even more viable with tax incentives.
But the hybrid situation is a real one too. I mean, we just had a car manufacturer, or a car salesperson, group one, who heads all these car companies. Said consumers really want hybrids too when they're walking in there.
Yeah, there's a difference between hybrids and plug-in hybrids. Hybrids tend to be more expensive than gas, so it doesn't answer that cost issue or price issue. But plug-in hybrids, you can get the range that most people drive every day with a plug-in hybrid. And so I think you're going to see people leaning into plug-in hybrids, and that's where GM.
What do you make of the sort of political divide around EVs? You talk to some leaders of vehicle makers today, and they say, look, in red states, buying an EV is not a palatable product. That this has been so politicized that there's a view that if it's like having a bumper sticker on the back of your car. If you're driving an EV, for a certain type of person, that's a bad sign, and for a certain kind of person, that's a good sign. And maybe it splits across political parties in some ways. Do you believe that is actually happening?
I live in a purple state, but on the red side of the purple state, and I've been driving a Chevy Silverado EV. Okay. It's got 460 miles of range. I pull up in the grocery store, the hardware store parking lot. I get a lot of questions like, what is that thing? Is it full size? How far? How much range do you get? Can I look at it? And so I don't get that vibe from the farmers and ranchers that are.
You don't believe the sort of.
They are not saying, "Hey, I'm not interested in this because of my political views." They're genuinely
John,
interested in it.
The Biden Energy Information Administration is estimating what U.S. cars percentage by 2050 will be electric. Do you know what their estimate was?
So that estimate's been moving around a lot, between 50%
12.
and now down
12%.
And we're already at about 8%. So I think it's a layup to go from 8 to 12 between now and 2030.
No, this is 2050.
Oh yeah, I don't think.
But that's from the Biden administration.
Yeah, I'm not sure.
That's not from a red state person. That's
yeah, I think the car manufacturers have very different views of that market.
Yeah, they've had to revise it. It's cost them some money to revise it.
And how big that EV market will be.
But sales will at 14% of total sales, 14% by 2050 is according to Biden.
Right, and I think we're close
They
to
could be wrong.
We're close to 8 right now, and I think
They're wrong about it.
We're going to blow through that by 2050 for sure. Because when you look at other countries that had a head start in this race, China's at 40%. Norway's at
like
about
100%.
Yeah. Germany is approaching those numbers. So I think that's it's going to be far sooner than 2050.
And Finland's the happiest place on earth.
It is. It is. Saunas and EVs.
I've got it.
John, I want to thank you. Appreciate you being here today.
Thanks for having me.
It's great to have you here, given your experience at Tesla. And we've got a quick programming note, because tomorrow we've got Tesla investor Ron Barron, who's going to be our special guest, and we'll discuss all of this with him as well.
All right, it's 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Becky Quick and Andrew Ross Sorkin. Among today's top stories, the Senate sending a $95 billion foreign aid package now to the president. He's expected to sign it today. The bill includes a ban on TikTok, unless its Chinese parent company sells that app. Reports say IBM is in talks to buy cloud software maker HashiCorp, and that stock jumped close to 20% yesterday on that news. Is it Hashish Corp or see? I might invest in that.
The dog.
Oh, okay, right. So, yeah, we're missing it. And tech giant Oracle will move its world headquarters to Nashville in order to be closer to what's become a healthcare epicenter in the U.S. Oracle had already moved its HQ from Silicon Valley to Austin, Texas, a couple of years ago, in 2020.
All right, let's take a look at the futures on this. Today's Wednesday, right? Wednesday morning. Let's take a look right now, and you're going to see that the Dow looks like it is still indicated off, but only by less than a point at this moment. S&P futures have picked up. They're now indicated up by 12, and the NASDAQ is up by 118. If you're watching the Treasury market, you'll see that the 10-year right now yielding 4.64, the 2-year's at 4.94, and we want to check in with Dom Chu for a look at some of the morning's pre-market movers. Dom, I'm going to take a wild guess. Is it earnings news that's driving things today?
Becky, Joe, Andrew, yes, it is an earnings bonanza that's driving our Wednesday morning movers here. So to Becky's point, we'll start with Tesla, which you guys just talked about, arguably driving a lot of the market narrative today, especially in the NASDAQ. Those shares are higher by about 12%, over 3.2 million shares of volume at this point. The electric vehicle giant posted actually worse than expected quarterly profits and revenues, but there is optimism, and it's being helped by confirmation that the company will accelerate plans to roll out new vehicle models, including a more affordable, lower-priced option. Also new this morning, analysts at Bank of America have upgraded that stock to a buy from neutral. They're citing things like the potential for more positive catalysts for the rest of the year. Now, for more on that story and other top calls of the day, subscribers of CNBC Pro can head over to cnbc.com/pro to get more detailed analysis there. Moving on to the late-breaking earnings news just out this past hour, that's aerospace and defense giant Boeing, also a Dow component. Shares are about 3.25% higher on around 200,000 shares of volume after it reported a smaller than expected quarterly loss per share on better than expected revenues. It also reported a smaller than expected drawdown on its free cash flow than analysts had feared. Boeing also said it's stabilizing, and it's seeing it stabilizing its supply chain as it deals with reduced production rates on its top-selling 737 MAX model jets in the wake of that regulatory scrutiny over quality control issues. Now, for more on that story, be sure to tune in to Squawk on the Street when Boeing CEO Dave Calhoun joins the team for an exclusive interview in the 9 a.m. Eastern Time hour. And we'll end on shares of AT&T, which are higher by roughly 4% right now, just around over 700,000 shares of volume. The telecommunications giant had a mixed quarter. Profits beat expectations, but revenues fell just shy of the mark. But AT&T did manage to exceed expectations for the number of wireless phone subscribers it added, and it posted better free cash flow as well. That free cash flow, of course, is very scrutinized by investors since it helps fund AT&T's big dividend payments. At current levels, that stock has a dividend yield of just around, get this, 6.7%. And just to put that in perspective, guys, that's roughly 5 times higher than the broader S&P 500. Becky, I'll send things back over to you guys.
Okay, great. Don, thank you very much. In the meantime, Meta will report quarterly results after the bell today. Joining us right now with a preview is Barton Crockett, Rosenblatt Securities senior analyst. Barton, Meta has been on a tear, not just the stock, but when you're looking at the growth in the company's earnings too. Is that something you think is sustainable?
Well, certainly, I mean, they're in such a tremendous place right now. I mean, I think in the first quarter, they'll be growing advertising 27% is what we're modeling. They grew it like 24% in the fourth quarter. I think that'll be the fastest growth of any of the major kind of internet ad complexes. I think Amazon will be growing 25%. I think Google consolidated will be growing, close to 8%. And so they're really, big and growing massively. The comparisons get tougher for them as you move over the balance of the year. They are growing their spending this year, so it is going to be a real kind of test, a gut check to see, do these guys really have the ability to compound big growth on top of big growth with big numbers? And our bias is skewing favorably. They've been making great investments in AI-driven kind of marketing tools. If anything, this noise around TikTok helps them. So I think they're very well positioned even after the great performance that they've put up.
Why do you think they are going to see the most growth in the ad market versus all the big tech competitors? Is it because of those AI tools?
I think that is a big part of it. I mean, they've been investing at scale. They've got a direct marketing focus in machine learning, AI. That's something where they seem to have built a better mousetrap, and the incremental ad dollars are moving their way. They're growing much faster than their social media peers, and I think that really speaks to the product. And this is a direct marketing driven marketplace for them that is results driven. And so they're getting the money because their marketers are getting the results.
Barton, can I have you weigh in on a broader conversation we've been having through the morning? We've been talking about productivity, the growth that we've seen in the last 3 quarters, whether it's sustainable, whether it's real, whether it's being caused by government spending, whether there's something to do with AI. I know a lot of places haven't seen huge uses for AI, but Jamie Dimon from JP Morgan talked about how they are using it actively in 400 different use cases, everything from fraud to marketing to idea generating. Moderna has a big story in the Wall Street Journal today that it's doing a deal with OpenAI, and it's hoping to, by the end of this week, have the ChatGPT available to all of its employees. And how they really see that for building things for drug development. Now you're talking about how Meta is potentially outstripping and outgaining its competitors in the advertising space because it's using AI tools too. Do you think AI tools are being used broadly enough to actually increase productivity at this point?
Look, I mean, I can't say that I've calculated numbers on that, so everything I've got is anecdotal. It certainly feels like there's a potential there. You know, it doesn't feel in the companies that I look at that it's been realized broadly outside of what we're seeing with Meta. But, you know, certainly Amazon's making a lot of noise. The cloud service providers are leaning into this. And there's tons of innovation and tons of experimentation. I think that this is, you know, moving beyond kind of a chatbot that would amuse you and help you do your homework. There's something that's getting stitched into, you know, everyday kind of business activity. And there's people who are doing it well and people who are doing it less well. But on balance, I wouldn't be surprised if we look back in a couple of years and this has meaningfully helped the macro backdrop.
Barton, thanks a lot for your time this morning.
Great, thank you.
When we come back, Stifel's chief equity strategist, not Andrew, Barry Bannister called last year's rally, but he may be more cautious right now. We will get his call on the markets at 8 a.m. Eastern Time. We'll be right back.
Our next guest, who, as we've pointed out quite a bit, accurately called the rally last year, and he was really lonely, says he's now very cautious on the market this year and favors value over growth stocks. Barry Bannister is Chief Equity Strategist at Stifel. And I can remember I was complaining about how wrong everyone had been. And I think your people contacted us and said, here's the proof. And then you started coming on more. But I can vouch for what I just said on the air, that did happen. And no, was there any, what would you say? It was about 5% of the street was bullish when you first got? 1 out of 20 of the people we have on. We still have on.
Well, I've always been better at bottom fishing than top ticking, and that's just my nature. We've had the view since last year that 2022 to 23 actually had a recession. That if you look at a recession, it's income, production, sales, employment, and fixed investment. The only thing that didn't weaken was employment. We're structurally short labor. We had a recession in everything else, like real retail sales. And so what we're doing now is recovering from a recession, which is why you've had this burst of productivity after a recession.
Not a classic recession.
No, we call it pseudo-recession. It was a major slowdown, like the mid-teens. We had one in the 80s, we had one in the O's. And because of that, the actions of the market are very much like a post-recession recovery, and that's what caught the Fed off guard, as the economy came back.
So why does that make you less bullish?
Well, when you think about it, the yield curve is inverted, meaning short rates are above long rates. And I think the yield curve will flatten. And a lot of people think, well, it's because the Fed's going to bring the short end down. But I actually think the long rates will go up. 5 was the norm before the financial crisis in 08, 5% on the 10-year. I think we'll see 5 again. And they'll cut a little bit, but their problem is messaging. You know, in the Greenspan Fed, and even Bernanke, when he took over from Greenspan, they kept rates at about 5. And so the Fed can cut a little bit, manage it like course corrections in a boat, but they can't really whack rates like they did in the last decade.
So your view on whether stocks continue to perform well is based on whether the Fed cuts or not?
No, the Fed is extremely important. I mean, you know, the market is the liquidity and rate-driven second derivative machine. But we just thought valuations, some of the the AI hype was a little overdone. So what we're looking for is a 10% correction off March 28th, which takes you down to about 47.50 on the S&P 500. We'll trade around these ranges through the summer.
The E could be okay, the earnings could be okay, but the multiple might already be as good as it's going to get.
We had a minor earnings recession outside of tech. I mean, it was negative outside of just
better
big tech.
now, aren't we?
Yeah, yeah. And so what you're seeing is earnings, employment. These are all late cycle phenomenon. And after the pseudo recession, you're going to get the recovery. So the Fed has to be on guard to that re-acceleration.
Why a 10% correction with earnings going up 10%?
That's just it. The earnings are probably going to struggle to do 10 this year. I think it'll be a little south of 10.
So it's going to be multiple.
It's multiple compression as people realize that the interest rates the normalize of interest rates is up. And it gets complicated. It has to do with R-star neutral rates, term premium. But generally speaking, we think we're in a higher rate environment for the long term. Multiples just got a little elevated on some of the hype, and that's what's got to come down.
Your hair's not on fire about inflation being worse than we're expecting. The Fed's going to have to actually tighten down the road instead of cutting. You just think we got ahead of ourselves. We get a 10% correction, and then we're back on track after that?
Well, the post-World War II average for the CPI headline inflation number is about 3.7% year over year, and 3 looks like we're going to be sticky at that level on the headline. So the core PCE inflation the Fed watches is about 2.5%.
Okay.
And a 2.5% core PCE world, the Fed's going to think, well, depending on the growth potential of the economy, we've got to keep rates a little closer to 5 than to 4, and that's what the adjustment is. The long end is going to be higher than the short end, and the short end is going to be higher than what people are used to.
When will you be as bullish as you were last year?
We'd have to have another bear market, and I do think there will be a bit of what we call a term premium shock that people are going to realize in 2025, next year, that the economy is bumping up on resource constraints. Inflation will bottom out and gradually turn up. Before he leaves office in May of 25, I think it is, I think Powell might be hiking rates again. and then the market would sell off again. We get another great entry.
We've had a lot of.
You think a bear market 20% down? That's
Yeah, that's probably more of a 2025 story, though.
But we do 10 this year, correction.
A 10% correction.
47.50 on
another
the
20%
S&P.
that you're saying.
And then
No, I think we rallied back. If you think back to the end of the year, we're going to have a relatively resilient economy, and what we've been focused on, we call it cyclical value. This would be a broadening out into financials, industrials, energy, basic materials, industrials. Some of those have already moved, but we think it'll broaden out in the fourth quarter. It'll be less tech-centric in terms of the recovery. But seasonally, I'm a little concerned between May and October. I just don't fight that too hard.
And I asked you whether you caddied for Krzyzewski. I thought, was that on the air? I was kidding.
No, I would make a lousy caddy. I would be talking the whole time to try to swing.
Because he's a lousy golfer. No, I don't know that. I'm kidding. I'm kidding.
Caddies for his
I know.
wife, too.
I know he does.
Yeah.
He's a great
His wife
skier.
is like almost a tennis pro. I think she's a great golfer
She was a
too.
college golfer, too.
Yeah, she's good. You ever visit the Florham Park, Stiefel? Have you been there?
Oh, yeah.
You have? It's
Yeah.
beautiful.
Yeah. We've got offices everywhere. Stiefel's a big retail brokerage as well as institutional.
Well, you're not everywhere. I mean, Florham Park, it's interesting. You have one right next to the.
I'm based in the Sarasota office.
Oh, you dog, you.
I
Are
know,
you? That's
yeah.
rough.
And that's one of our retail branches. We also have one in downtown Sarasota and Venice. We have one in Tampa. I mean, you can choose where you want to work.
We got to do a quick out, Barry. I just use Mike. I think of the way you say Coach K's name. That's how I say Ron's name. Basically the same, right?
Yeah.
Stop. All right.
Welcome back to Squawk Box. Our next guest says the banking industry is back to being a boring business, and that is a good thing. I want to bring in Mike Mayo, senior bank analyst at Wells Fargo. We've got a lot to discuss about the banking business, including the travails and future saga of Citigroup and other institutions. You've got something in your hands.
Yes.
What are you holding?
Well, Citigroup is my dominant #1 pick.
And what I say here is, let's go. Citigroup reorg, take 13.
Take 13.
Take 13, the 13th
Okay.
restructuring.
Lucky
at
13 is what you're saying?
For Citigroup, everything's a little upside down, but this time is different for
Lucky 13.
This time is different for Citigroup. They finished 7 months of what they called org simplification, and people said they were going to implode, they were going to lose revenues, lose customers, and guess what? They had the best first quarter. They beat expectations by 1/3, top line, bottom line, and it's going really well. They maintain their best of industry guidance for 2024, and guess what? Over the next 3 years, we have earnings doubling.
Right.
Goldman Sachs, we have up 70%. No other bank is up 50%.
Okay, so, but this is a stock right now, call it $62 for now. You think 12 months from now, at the rate they're going, or call it even 24 months from now, given your long-term outlook for this company is what?
So we have earnings going from $5 a share last year to $10 a share in 2026. We have them getting over a double-digit return on equity. You haven't
Okay.
seen that for a while. That gets them to tangible book value, which means a double in Citigroup stock, somewhere around $110 to $120 a share. A double in the stock. I know
Double in the stock in what time period?
by the end of 2026. So we're talking, what, 2 years and 3/4 away.
And by the way, what else does that say? That says the direct, put it up on there because everyone can see here. Citigroup reorg, take 13. The director is Mike Mayo, just so we're clear here. And the date is the present. Okay, so we'll see if you have to come back and erase that and do take 14 and see what it actually says.
The difference this time is this restructuring is creating 5 lines of business. It's services, banking, markets, consumer, and wealth. This is similar to what Procter & Gamble did 5 years ago. That was the most successful restructuring in the consumer staple space, according to our analyst at Wells Fargo, Chris Carey. And it's similar now. Citigroup's going to 5 lines of business, and you have more transparency,
A number
accountability.
of those businesses are very competitive businesses already. I mean, like the wealth business is a competitive business.
I concede wealth. That's 10% of the company. I don't know where that's going to go. They say that's going to improve. They have Andy C. Great. But 80% of the company is very well positioned at Citigroup. You have the global payments or services business, best in class, 25% of the company, markets and banking, as you know, top 5 global investment bank, and a top 3 credit card player. That's 80% of the company. So those people saying Citigroup, I will never own it, that's wrong, okay? Because 80% of the company is structurally
So
positioned.
every bank out there right now, this is your top pick.
This is my dominant top pick. Now, look, I recommend.
What's your number 2 and 3 pick right now?
Well, Goliath is winning, is working. Okay, so Bank of America and JP Morgan are my number 2 and 3 pick, kind of tied. They are benefiting from the diversification, but not too much commercial real estate. That's still an issue.
Okay.
CRE is TBD, to be determined.
Yep.
It's going to play out over a few years. Not a whole lot of commercial real estate exposure. On the other hand, you're generating deposits. And for these 3 banks and the industry, you're talking about a multi-year EPS inflection point because you're having earnings for the industry go down probably 20% by the end of this year. So you're playing for 25 and 26 when earnings go up by 1/3. You're having revenues go from negative to positive. You're having traditional banking revenues, net interest income going from negative to positive, operating leverage from negative to positive, provisions from a headwind to a tailwind. It's going in the right direction. It's been a long wait, but that time is coming to own more bank stocks.
We got to run. Is there a bank right now you do not want to own?
Look, there's several banks with commercial real estate exposure, and I'm not saying it's going to be bad. I'm just not sure it's going to be good. So there's a series of regional banks here, whether it's Comerica or M&T or Regions or Zions. I'm just, if you want a cheap stock, go with Citigroup. They're trading at a 30% discount to tangible book value.
Okay, Mike Mayo, save that, and we will.
There will not be a take 14. This is
No
it.
take 14. Okay, there it is. Open to have a prop on television.
All right, when we come back, former TD Ameritrade Chairman Joe Moglia will join us for a wide-ranging conversation on the state of the markets and what's happening with college sports and the NCAA. And a reminder for you as we head to this break, on May 4th, Warren Buffett will be holding court in Omaha, answering shareholder questions for 5 hours at the Berkshire Hathaway annual meeting. If you're a shareholder and you've got a question, please send it to berkshirequestions@cnbc.com, or I'm sorry, BerkshireQuestions@cnbc.com. We'll be reading through them and selecting some to ask during the meeting. Stay tuned. You're watching Squawk Box, and this is CNBC.
NBC.
Welcome back to Squawk Box, everybody. This is CNBC. We are just seconds away from March durable goods orders. Ahead of that, we've been watching the futures this morning. The Dow is basically back to flat. It's down by about 7.5 points right now. The S&P has picked up some ground through the course of the morning. It's now indicated up by about 14 points. And then you've got the NASDAQ, which just continues to grow this morning. It's up by 130 points for the futures there. Treasury yields have been at about the same level we've seen in the last week or so. Right now, the 10-year's still at 464, basically. 2 years at 493. Rick Santelli is standing by at the CME in Chicago, and Rick has some data for us with those durable goods orders. Rick, take it away.
Yes, in a few seconds, we're going to see March preliminary durable goods. It's a very volatile series, so of course in a couple weeks it may change. Headline number lately has been affected by transportation. All right, the numbers are hitting the wires, expecting a number close to up 2.5%, and it delivers up 2.6% on headline durable goods. That is the best number going back to, well, we'd have to go back to November of last year when it was up 5.4. If we strip out transportation, it comes back down to earth. So we could see that in this instance, transportation was a positive. It moves down to 0.2, but that was expected, up 0.2. And if you look at capital good orders, non-defense ex-aircraft, that's also up 0.2. In the rearview mirror, there's a revision, a big revision, from up 0.7 to only up 0.4. But maybe the area to pay closest attention to lately is the shipment side. Expected to be up 0.2, it is up 0.2. In the rearview mirror, we had minus 0.6%. That is unrevised, and that is the worst level going back to Feb of 2021. So we definitely want to pay very close attention. And durable good orders at the beginning of the year started out with a big negative. So we are reversing some of that, and we saw that big negative earlier in the year. Much of that was transportation orders. We see that interest rates, as you pointed out, Becky, haven't done much lately, but what they did prior to lately was hugely significant. In case anybody didn't notice, we kind of went through 4.5 on a closing yield basis in 10s like a hot knife through butter. 467, the 16th of this month, is the high yield close going back to November, and it is a doozy of a resistance level. I mentioned it about 3 weeks ago. You want to watch that one very closely on a closing yield basis. Becky, back to you.
467 on the 10 years, the doozy?
Yes, that's correct, on a closing basis.
So right now we're at 464. You've got a big PCE number coming out on Friday. If you had to take a wager, higher or lower, which way would you go? Are we going back towards 4% or 5% next?
You know, I think what's going to happen is I think the preferred inflation numbers are going to come out roughly as expected, and the yields will back away a bit. So I think 467 on a closing yield basis will remain intact. But I'm still of the belief that the huge spending and the huge deficits in auctions, like 70 billion record auction today of 5-year notes, will eventually push that yield above that level. And I don't have any significant resistance between 467 and a test of 5%.
Weeks. Rick, thank you. Steve Leisman joins us with more right now. Steve, what are you looking through? What are you
this is the last number we get before tomorrow's GDP number. It will affect GDP numbers. It should be used as part of the inputs. And that down revision of February that Rick reported is going to have an influence, especially if I can't find it. I keep looking for it. The shipment number, if that number went down, the capital goods orders ex aircraft shipments is a number that will feed into GDP, and whether that was revised down from February. I don't know if Rick's still there, but yesterday he reported the PMI numbers at 945. And guys, if you have a 2-day chart of the 10-year or the 2-year, either one, I've never seen the market react to the PMI numbers at 945 the way they did yesterday. Huge decline in yields with this notion that this was a leading edge of the slowing economy. And you just want to be a little careful. This number did come in hot on the headline number, but take out the transportation component. There's tremendous volatility from Boeing orders. I don't know the exact numbers. It was like 3 in January, 4 in February, and like 115 in March. And it goes up and down. That's why we look at the ex-transportation number. That's why we look at the capital goods ex-aircraft for investment. I'm really watching business investment right now for a sign of confidence in the economy. I'm watching this AI stuff. How much money are they pumping into AI? These are critical factors that will determine the outlook for productivity. The music is playing. I'm continuing to talk. I think it's time to be quiet.
Really well.
Coming up, we're going to be joined by former Dallas Fed President Robert Kaplan on the new data that we just got, Fed rate path, and much more. Stay tuned. You're watching Squawk Box on CNBC.
Welcome back to Squawk Box. Joining us right now to talk about the durable goods data that we just got and the GDP and inflation numbers due later this week. Want to bring in former Dallas Fed President Robert Kaplan, and also want to get his thoughts on maybe the way the Fed should see this, will see this. I don't know if you want to take us inside the brain of Jay Powell to the extent you think you can do some mind reading for us.
Yeah, so I think this most recent durable goods number is consistent with a resilient economy. And I think the overarching narrative in my mind is we have historically restrictive monetary policy being blunted to a great extent by historically stimulative fiscal policy. Unspent American Rescue Act money still being spent, Inflation Reduction Act projects, Infrastructure Act projects, and the conflict between those two has meant that particularly the services sector, inflation in the service sector has been stickier. Goods are disinflating. That's being helped by China overcapacity and particularly global overcapacity. But services, particularly labor, is where ground zero is of this inflation issue. And if I'm at the Fed, I think what they're thinking is we're at full employment and they can afford to be patient, and they do not want to make a mistake by beginning rate cuts and then having a resurgence of inflation, particularly in the service sector. So they're going to wait, and I think they're going to push back expectations for a rate cut and leave their options open for when they might act and the direction even that they might act. And it's because of this conflict between
So you think it's up in the
monetary and fiscal.
To the extent there's either a rate cut in our future, or maybe even, I think you're suggesting there's potentially even a rate hike in our future, you think this is now into a 2025 event?
I still think there's a chance that the Fed could cut rates in 24. They'd like to cut rates. It would be helpful to the banks. It would be helpful to small business. And also you have a perverse impact on rents by having high rates, because it's very hard to buy a home. It's hard to build a multifamily rental project. Might actually be putting upward pressure on rates, on rents, I should say. So I think they're going to keep their options open. I think the bar is extremely high for actually raising rates down the road, but I think they're going to be patient, non-committal, and kick the can down a few more months.
So what do you think the chances are that they raise rates, though?
I still think it's extremely low.
Very low, okay.
And I would far rather see the Fed, and they're loath to do this, call out the impact of fiscal spending, and I'd love to see a more whole-of-government approach to fighting inflation. And what do I mean by that? Slow down implementation of the Inflation Reduction Act, slow down implementation of the Infrastructure Act, slow down implementation of unspent ARPA money, because if you leave it solely to the Fed to fight inflation, we're going to have higher rates for longer, and it's having distorting effects and other damaging effects to the economy, I think, over the long run.
What do you think, or do you have any concern about the employment picture as the year progresses? I mean, I think this is the issue that Jason Furman was raising earlier today.
I think as long as you've got this size fiscal stimulus, people got to remember, we ran a $1.1 trillion deficit for the first 6 months of this year. We ran a 7.fraction% deficit last year. That is historically high when you're at full employment. And these Inflation Reduction Act projects, Infrastructure Act projects, are stimulating demand for workers. And I'm seeing that all over the country. So yeah, I think the labor market is going to remain resilient.
So just so we're clear, though, let me just flip this whole thing around. We're looking at equity markets right now, and I think there's still an expectation or some kind of grand hope that we do get a cut before the end of the year. If that doesn't happen, how do you think about the valuations that you're seeing out there?
I think there's still a chance for a cut this year. If that doesn't happen, got to remember the big platform companies like Meta, Amazon, NVIDIA, these are companies that don't tend to use debt. They're platform companies. I think those companies can still perform very, very well, even if rates are sticky. I think where you're going to see higher rates shake out is on smaller, mid-sized companies that don't have the size and scale and access to technology and are more sensitive to labor costs. I think they'll be disproportionately negatively affected if rates stay higher for longer, and obviously anything interest rate sensitive will be negatively impacted.
Okay. President Kaplan, appreciate your time and perspective, of course, this morning. Thank you.
Good to talk to you.
All right, coming up, former TD Ameritrade Chairman Joe Moglia is going to join us. And check out the shares of Moderna, just announcing a partnership with OpenAI that will give the pharma company's employees access to ChatGPT Enterprise. Stay tuned, you're watching Squawk Box on CNBC.
Welcome back, everybody. JP Morgan Chairman and CEO Jamie Dimon praising the state of the U.S. economy in an appearance at the Economic Club of New York.
It's unbelievable, but if you look at it, I mean, it's basically booming. It's been booming for a while. Since COVID, and kind of before there was slow growth. If you look at the economy before, it was very low growth for 20 years. And if I was a government, I'd be looking at that saying, why? And I think there are a lot of bad reasons for it, like regulations and bureaucracy and stupidity and forced policies and, anti-growth taxation and a whole bunch of different other types of stuff. But if you look at the economy since then, it's been booming.
Joining us right now to talk about the economy and the markets is Joe Moglia. He is former TD Ameritrade Chairman and CEO and the Chair of Athletics at Coastal Carolina University. Joe, we want to talk to you about a bunch of stuff, but why don't we just start with what we've seen from the economy and how the markets have really played off of that? I mean, Jamie said how great the economy is doing, but he also said later that most of the time the markets try to confound the most people as possible, and this could be setting up for one of those times. I think he's more concerned about what the future may hold.
I think Jamie, being probably the second greatest CEO of our time in the financial world, he often, when he comes on, he's got to be concerned about what's going on in the world. He's got to be concerned what's going on in the economy, and he's got to be prepared for that.
Risk management.
Yes.
Yeah.
Were you
yes.
first?
Well, I didn't want to say that because I thought you would, and then I didn't want to correct you. So I was just trying to.
I'm in disbelief.
I was just trying to be. I was just trying to
process. I'm still trying to process what the F you're talking about. Now I got it. Yeah, okay, I got it.
And I think he's right in terms of where the economy is today. I think one of the things that I've got a little concern with, if you look at the savings rate for the individual consumer, today it's around 3.7. Last year was 4.4. Traditionally, it's been about 8%. Now that's significantly less than what it has been. So they're going to have less money to spend, obviously, as time goes on. So there are certainly concerns we've got with the economy. I think the biggest one, our economy is in good shape. We got a great labor market, inflation's under control, history's on our side. One of the things that keep coming up on the show is, once you have a 10% correction. The reality is, since the financial crisis in 2008, there have been 11 positive years. In those 11 positive years, there's only been 10% corrections.
Wow.
So we recently saw about a 5% one. So I think we may or may not see that. If we do, it's once. It's not going to be the end of the world.
You think it's changed post-financial crisis because of the Fed's intervention and the government spending that's gone into all of these issues from the pandemic on?
Well, I think when we've had the significant crisis we had, like with regard to the pandemic, the answer would be yes. Then we had the financial crisis, and we had the bailout. So I'd say the answer would be yes with regard to that. But right now, our economy is in reasonably good shape. The concern that I've got is what's going on geopolitically. I think it's more tense today than it was a month ago. I think I applaud the aid packages that have been approved, but that's just going to further irritate, I think, Russia and China and Iran, and that's just going to exacerbate the tension that already exists. So that's the biggest concern that I've got in the back of my head.
Oil prices still at like $83 a barrel, barely. That's the one really surprising thing from all of this the geopolitical potential fallout, particularly when it's focused in the Middle East.
I would agree, but because unless we think there's not going to be any more problems in the Middle East, I think the risk to oil prices that they go higher rather than not, and that's going to have a negative impact on the economy.
We have bounced around today and every day, just this idea that the markets have hung in so well. I mean, we saw a 5% pullback in the S&P 500, and that's been erased this week. What gives? Earnings coming in strong. Some of the inflation numbers have been stronger than expected. The Fed less likely to cut. Leisman was just pointing out that there's only 16% of a Fed cut come June. The numbers are coming down for July and even September at this point. Everything's clear?
Yeah, I mean, I think everything really looks pretty good, with the exception, I think, of the geopolitical issues going on. Even, again, historically, in an election year where we have an incumbent, there's a 12% gain that year, and that's, I think, 16 election years in a row. So the economy's in good shape, and I think the Fed's doing a good job looking at the data, and they'll do a good job making decisions as they assess that data. But we're okay. There are significant issues, I think, around the world that can have major impact, obviously, on us. But right now, the market doesn't seem to be overly concerned with that.
Joe, we talk to you about the markets and the Fed a lot. We don't get the chance to talk to you very often about what's happening in collegiate sports with the NCAA, and that's something you know very well from your years as a coach in the NCAA and your years and experience now at Coastal Carolina. What do you think's happening with bringing in NIL and the splintering of the different leagues?
I think the biggest issue that I've got with regards to NIL is not the players getting paid. There is no structure, there is no organization. There's been a lack of leadership from the NCAA from the very beginning, and frankly, college athletic leadership has not stepped up to fill that gap. The only way, in my opinion, and there is a lot of talk about doing this now, that this is going to get fixed is the Power 5 schools totally break away from the NCAA, period, have their own executive team that is totally autonomous, separate from the NCAA altogether. They have to, if the NFL modeled themselves or ran themselves the way college athletics is today, they would go out of business. So you model yourself after the NIL, you have collective bargaining, you have salary caps, and eventually you'll figure this out. But right now, it's the wild, wild, wild west. There is, with regard to our team, for example, there's not a player in our program, there's not a kid we talk to on the portal or a kid we're recruiting that doesn't begin with what kind of NIL opportunities we have. This is absolutely a business, and the athletes we have in college today are far more, especially in football, far more professional athletes than they are student athletes. What upsets me the most is nobody's talking about eligibility, nobody's talking about graduation rates, nobody's talking about what you're going to major in. It's just about how much money I'm going to receive. So this needs structure, and right now it hasn't got any.
And the problem with this is what? I mean, as a fan, I know what the problem is. It's a different team every single season. It's hard to follow sports like you used to for your own alma mater. But what's the problem from your perspective on what's happening?
Lack of leadership. We need somebody to be able to step up, and everybody's going to operate or is operating in a way that's under their own best interest. The television revenues are significant, so the Big Ten, excluding the schools that are coming from the West Coast, this year could very well make $100 million apiece just for football every year, and that may go up. There's nothing to do with NIL. But so nobody wants to necessarily change that because of the amount of money that happens to be involved. But at the end of the day, this cannot go on forever.
Why not?
It's chaos. It's chaos. Again, there's no structure. There's nothing along that line. That's why I'm adamant. I've been saying this for 3 years now. The Power 5 football has to break away. If it does and gets a legitimate executive team and models themselves after the NFL, it will work out.
Everybody else will follow suit?
Well, they got to get that right first, and then at least they have a right model, and then you can kind of go on from there.
There's big bucks involved with it. It is amazingly interesting from the fans' perspective and from the business side of things, too. Joe, I want to thank you very much for coming in today.
Thanks, Becky.
Joe Mulder.
Andrew, Joe,
Number one, numero uno.
Coming up, when we return, the biggest takeaways from Boeing's first quarter results out just a short time ago. We'll speak with a top analyst in just a moment. You're watching Squawk Box, and this is CNBC.
Boeing was out with first quarter results. Plane maker reporting a smaller than expected loss, but commercial airplane revenue dropped by almost a third versus last year. Joining us now with his reaction is Ron Epstein. He's Bank of America securities research analyst. He has a $190 price target on Boeing with a neutral rating. The stock's reacting well today. Ron, and is not far from your target. These results were, I guess, to be expected. It's not a great time for Boeing. Are they managing through it with some positive prospects for the future?
It's too soon to tell. I mean, the real question on investors' minds is who's going to be the new leadership team, right? I mean, you saw a lot of change at the company recently, right? I mean, the CEO announced that he'll be stepping down. So who's going to replace him? And then they'll bring in their own team. You've got a new leader at Boeing Commercial, a new chairman of the board. So, excuse me, there's been a lot of change. I think the real salient points in the quarter, and maybe why the stock's up a bit, was the free cash flow burn. Albeit $3.9 billion was a lot. It was a little bit less than what the street was looking for. The street was looking for about $4.4 billion burn, so that was a little bit better. Their defense business was a little bit better, right? They were 2% margins roughly. And then if you look at their services business, that was really kind of the shining star. And it's been, services had good margins. But I think, the real thing on investors' minds are, one, who is this next management team going to be? And then two, expectations set by, this current team regarding the turnaround. Are those expectations realistic? And how long is it going to take? So it's really where to from here. And we're in a bit of a holding pattern until we hear that. And in a letter to employees, David Calhoun, the current CEO, sent out this morning, said that they'll be delivering a lot of 737s and 787s out of inventory this year. That should drive cash flow generation in the second half of the year. But to be honest with you, that's what we've heard from this management team again and again and again. So, what's changed now? Why is that going to happen in the second half of the year? So, yeah, with our 195 price target, we're very comfortable neutral here.
Yeah, it's a show me situation for sure. Do they need an engineer? Do you think would that help so that it doesn't get into the safety and issues again?
Yeah, I think you need an engineer in the top level of the company, an engineer, CEO or CFO or someone in that team. As we've discussed before, I mean, there's been such a migration away from a focus on just sort of engineering excellence and so on and so forth, and a real focus on the financials. So yeah, I think having engineering prowess at the top.
Okay. Although they had one not that long ago, that didn't work either. Muhlenberg, I think we were out of time. I think Ron, I see what you're saying. You're close enough to 195 to be. What'd you say? You're very comfortable at neutral right now. Okay, that makes sense. We'll take one. Thank you, Ron, and we'll see you again. There's the futures. We got to go. We'll be back tomorrow. All of us. Make sure you join us. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. S&P coming off back-to-back gains, first time in 2 months. Dow trying to make it 5 straight gains for the first time this year, as Hilton, Texan, Boeing all in the earnings mix. We're going to begin, though, with Tesla surging in the pre-market despite this quarterly miss, including its biggest revenue slide in more than a decade, due in part to price cuts and weaker demand. Shares of the EV maker getting a boost from the company's growth strategy. This is Elon Musk outlining his plan on last night's call.
We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year. These new vehicles, including more affordable models, will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. So it's not contingent on any new factory or massive new production line.
Jim Bespoke says this looks like it will be the best earnings reaction since 2020.
Well, look, you do have some upgrades. You have a very nice Bank of America upgrade, and you have people saying it's a clearing event. Did he pull a rabbit out of a hat? He came out back with a small car, as well as with the terrific app, by the way, in the deck. That is the hailing app. I thought that the key analogy, David, was not the Airbnb analogy. He did that. It's great. It was the elevator.
Yeah.
Was that not terrific?
You're not alone in that, Jim. It's funny. It came up in a couple of conversations I had this morning, and then somebody actually went to Perplexity and tried to figure out how many elevators there are in the world.
We have to talk to
I'm
Judy
not going to
Marshall
share the
about it.
number because it sounded way low because they were like, that's a great analogy. How many elevators are there?
Tell people, because it was such a great analogy about how it started with the unit.
Well, you used to have somebody in the elevator
Yeah.
who operated the elevator. Do we ever think about getting in an elevator any longer and having somebody in there pulling the lever
No.
for us? Of course not.
But don't you think that's just like he just comes up with with a compelling reason why you should buy the stock? Things like that.
He does. I was listening to the call last night, a couple of other people in my house who were overhearing it, and I remarked on how believable he is, sort of uniquely.
Totally.
And yet, somebody else piped up, yeah, but should you believe him?
Should you believe him?
Doug Cass today, extend and pretend. Bernstein keeps 120. Jim says that growing units this year, in Tony's view, not a slam dunk.
No, but I mean, you have Adam Jonas talking about an accelerated launch of more affordable models. Dan Ives likes the lower cost vehicle, but he did lower the price target. Goldman talking about better than the low expectations. I mean, I think that the Baird piece, which is C's turning point on bearish sentiment, this is now trading on sentiment. And the sentiment was so low, the Jonas stuff was terrific. The sentiment was so low that it was almost like if he just came in and said, listen, we'll do small car, and at the same time, we'll do a rideshare app. Well, I mean, look, do you think it's only going to be up 15? I mean, I think this thing has the possibility of being up 30 because the sentiment changed. Now, David, the free cash flow didn't change. It was bad.
Oh, and they consumed an enormous amount of capital during the quarter, as an automaker will, given how capital intensive the business is. What is it, $2.5 billion? What was the number? Yeah.
So, Carl, I mean, you get to a situation where individuals love this stock. I mean, when we talk about what stock people want us to talk about, they want us to talk about Tesla. Well, they've been waiting for this, but what are they waiting for? I mean, now the app is cool, like you summon it. Well, you know, I summoned an Uber last night. It just so happens there was a person in it driving. I like that. If this Uber had come without the driver, I may not have liked that, given the fact that I was in San Francisco during a period where you didn't really want driverless.
Although he did say that version 12 is, quote, profound.
Right.
And we actually have Uber and Lyft moving on this today. I don't know if it's apples to apples, but Lyft is down 1%.
But I think that we're in one of these interregnum periods where everything that was bad, judging from, it was all like started by Super Micro and Taiwan Semi, everything that was bad, Dave, is now good. It's frontsy backsy. It's like, remember the movie Bananas?
Yes, Woody Allen, yes.
Everyone must wear underwear, and in order to be able to assure it, we have to wear it on the outside. I mean, that's what we have. But people probably don't even know who Woody Allen is. It's really pathetic.
He's Woody Allen?
Yeah, do you think
there's a movie in theaters like right now?
Well, I mean, but that's the bad Woody Allen. But I do think that this is almost comical.
Yeah.
It's almost comical how much everybody loves a free cash flow story.
By the way,
horrendous.
if I'm not mistaken, Sleeper, I mean, there were autonomous automobiles, remember?
There were all kinds of gadgets.
Yes, the autonomous automobile in Sleeper.
You're absolutely right.
Before, what's his name, used the nuclear bomb, was the head of the teachers union, right? What was his name? I forget who's.
Well, I mean, is that more or less fanciful than what he offered us last night?
Listen, he told people flat out, his investor base, if you want to invest in a car company, we're not interested. We are only interested in, or not, what you should be interested in is autonomy and robotics, because that is what we are. And obviously with almost a $500 million market cap again today, given the move up,
name me another
what they're
company.
going to have to be.
Name me another company with incredibly negative free cash flow that's going hard.
I can't.
To your point about sentiment.
Boeing.
Oh, Boeing is actually higher ahead of the bell after this narrower loss and lower cash burn than expected for Q1. Our Phil LeBeau is at the production facility in Renton and has a very special guest. Hey, Phil.
Hey, Carl. Hey, Gallo. Thank you for joining us this morning. You heard the setup there.
Yep.
Q1 big loss.
Yep.
Less than the street was expecting, but you still burned through $3.9 billion in cash.
Yep.
Is this the bottom in terms of free cash flow and how much you're going to be losing per quarter?
Yeah, I rather than address the bottom, this first half will be the result of a lot of dramatic actions that we've taken in this factory to slow things down. Synchronize all of our work with the supply chain, eliminate large portions of traveled work that we did in our factory to take a non-conforming part from a supplier and turn it into a conforming part. So we've made some dramatic changes. We had stand downs, So the cost in the first half will be real, but then we'll get back in normal order as we get into the second half.
How much different is the process behind you right now than it was 60 days ago, specifically in terms of the fuselages that you're taking from Wichita from Spirit Aerosystems?
Yeah, it's dramatic. It's dramatic. So we took all of the inspection processes and the people doing those inspections, and then the people who are doing the rework embedded in these positions in the factory, and we moved it to Wichita. I give Pat Shanahan a lot of credit for saying, bring them down. Let's do it. So they are now embedded there. And for this, from that day forward, which was really March 1st, we will only accept, they will only ship a conforming fuselage, which means it comes in this door in near perfect shape, and then it moves through this factory at a much reduced cycle.
More than a few on Wall Street have said, look, you still have the target out there of $10 billion annual free cash flow by the end of 2026. Get rid of it. I have not come across one analyst who has said it's a smart thing to keep it out there. Why, you didn't reiterate this morning, but you're not taking it down. Why keep it?
Because I believe it. I just do. So this will cost us 6 months. That means in that 2-year window, it'll be 6 months later than whenever it was going to happen. I still believe it'll happen in that 2-year window. And by the way, this was never a heroic target. This was a target that we believe we could meet when this factory moves and 737s move and deliveries are done. So I'm still strongly believe in it. And I actually believe that the work we're doing to eliminate travel work in these factories, to resynchronize with our supply chain, make it more probable, not less.
Jim, I know you have a question for Dave.
I wanted to know, obviously Steve Mollenkopf, fantastic guy from Qualcomm, working his round 24/7 trying to find a successor. How about Stephanie Pope? She's there. She's terrific. Maybe it's someone internal that you need because the problems are so complex?
You know, Jim, I happen to be a pretty strong believer in Stephanie's potential to run the company. We've invested a lot in Stephanie. You saw what she did with our services business for the last couple of years. We're at record margins. We're meeting our customers' demands. And she came in here and put both feet on the ground, and she's been out on that floor. It's a little bit of trial by fire on that front, which I am confident that she will work her way through and perform. And then, yeah, Steve still has a tough job. Steve will canvass the industry. Steve will canvass the CEO community. And Steve will get to know our company. He's already invested a lot of time and energy in getting to know our lead technical people. He's developing a real perspective, and he has time to do it. He has time to do it. So I'm quite optimistic about these outcomes, and I am quite optimistic about the performance that Stephanie Pope will bring to BCA.
Dave, next week marks the 60-day mark, if you will, for reporting back to the FAA saying, here's where we were in terms of fixing the problems that exist here on the 737 MAX line, and then 90 days at the end of May. By the end of May, do you expect the FAA to say, look, we are signing off on the changes that have been put in place here?
Yeah, so first of all, the review is going well in the sense that we're both approaching it business-like. We all want the same thing. We want a factory under control. We want a set of metrics that demonstrate it's under control month to month to month to month. And then we want compliance on the floor. Are your tools in the right place? Are the instructions set up the way they're supposed to be? We want that to be as perfect as it can be. Easily measurable, and I think at the end of 90 days, they will simply say, we agree with this control plan, we will measure it, and you will have to demonstrate performance every step of the way.
You've seen the metrics already, so you know some of these numbers. Percentage-wise, how many fewer problems are you seeing, let's say, this week than you saw 2 months ago?
Well, if I pick that one part that we talked about, the fuselage, the incoming, reduce our non-conformance load about 80%.
So you've got 80% fewer non-conformance problems with the fuselages coming in from Wichita than 2 months ago.
Yes.
So as you look at this, is this the low in terms of max production? Because so many analysts are out there saying, look, these guys are going to be back up.
And it's more about whether it's a low or not. It is wildly sporadic because, again, we're trying to sync up our supply chain. This will begin to steady as we get through the second quarter. And then it will be all about how many perfect fuselages do we get from Spirit. That will be the constraint, and that will be the opportunity. I'm confident we'll get there.
You saw the whistleblower hearings last week in D.C. Not sure if you watched them or not, but you saw that it was going on.
Yeah.
You know the commentary that's coming out of Capitol Hill.
Yeah.
How often are you in touch with senators? Separate from any discussions about a hearing
Yeah.
and testifying, how often are you talking with them?
Well, you'll probably remember, I think the second week after the Alaska accident, I went and visited with a whole bunch. I've been in regular contact. Every week, we tee up one or two conversations so I can bring them up to date on everything we're discussing. The NTSB investigation, the FAA work, our determination to see the Spirit worked through, our willingness to slow down the factory to get things under control and synchronized with that supply chain. I walk them through all of that. They're very appreciative of the conversation. I don't want anybody surprised. And yeah, so I'm doing my very best to, one, always be responsible, and two, always be transparent.
Real quick, Spirit Aerosystems. Do we see an acquisition likely in the second quarter? Announced?
Yeah, so let me first say, it's not being delayed. Nothing's off the rails. We are working diligently to get it done, and I'm determined to get that done. Spirit, in working with its other customers, are taking actions to ensure that all of those relationships are what they need to be. And everything they do in that regard is better for us. So we're going to be patient and let them get their job done with their respective customers, and then we'll get a deal done. And I believe in Q2. It's more than likely.
Dave Calhoun, CEO of Boeing. Guys, we'll send it back to you.
Yeah, thank you.
Wow, extraordinary, because I think some people would say the cash flow here is so weak that maybe this is the same thing that we saw during the Great Recession, trying to put together a bond. I mean, during the COVID period.
Almost 4 years ago.
The Steve Mnuchin bond
It
deal.
was 26
right?
bill, I think. It turned the market.
Yes, it turned the
when
market.
they were able to raise that.
But somehow, David, people were kind of sanguine.
Yeah. Well,
sanguine.
I mean, Phil pushed Dave Calhoun, particularly on the target for, what was it, 20, the 10 billion target. He said, I believe it.
I know. But why does he have the credibility? I'm just asking. I happen to think that he does.
You do? You do?
Well, look, I think that in the end, you have two companies. Airbus is having trouble meeting demand. They've got 8 years worth of demand at Boeing. They need the planes, the customers. The customers aren't saying, you know what, we're going to go to a...
Well, there's nowhere else to go.
There is nowhere else.
Right, well,
This
that's
is the
why...
duopoly defense.
Yes.
That's why I think that, yeah, I believe. Because
how can you not? Because there's growing demand and we need new aircraft.
And a lot of these United the other day, we've already hired the pilots.
No, it's just, listen to Larry Culp. I mean, from GE Aerospace. Look, this is a high-quality problem, admittedly. They have to get the cash flow. But how many industries have a situation where the demand is so much greater that we have to overlook problems like this? We have to overlook them?
Well, there are some problems that you can't overlook when it comes to Boeing.
Well,
like making sure they're putting everything together the way it's supposed to.
Well, that's a safety issue.
Yes.
Which remains his memo was all about safety.
Yeah, Craig Hayes, when I was talking to him about this recall, he said, Jim, you know what's really important here? Safety. And I'm like, okay, sounds good. Yeah, no kidding.
Safety first.
Safety first?
Safety first.
Really? Yeah. David's very concerned.
Yes. I'm very safety first.
When we come back, a bunch of earnings to get to, including AT&T, Visa, Hilton, Hasbro, Mattel, Otis, Biogen, Humana. Take a look at the pre-market as the Dow tries to string 5 wins in a row together. Don't go away.
It's a beautiful morning. Alrighty. Can't wait to have a good day. How's this work? I got my thing. Wonder how that happened. Oh, don't want that. Huh, how do I get that?
Prices go up.
Let's talk a little AT&T. You can see the stock does appear that it will open higher, although it already in the pre-market has been
Man, it's hot in
higher
here.
than that.
We got a double bottom and open.
Calls still ongoing, I believe.
Okay.
Started at 8:30. I'm reading a running transcript of it. I mean, the results were pretty good. You know, I did talk to the CFO earlier this morning.
You did?
Yeah, I did. Pascal DeRoches. Yeah, 170 basis points in margin expansion. They had the most postpaid net adds, 349,000, and their fiber business continues to grow very quickly. They got 8.6 million subscribers in fiber. It's making them one of the bigger players there, and obviously they have more opportunity, they say. This has been a key strategic area for them. Wireless service growth roughly 3%, and they're guiding free cash flow between 17 and 18 billion dollars. I did ask him, you know, all right, what's the margin expansion about here? Where is that coming from? You know, he obviously mentioned they've already cut $6 billion in run rate, have $6 billion in run rate savings already that have come out over the last few years, or has been added, depending on how you want to, you know, cost cuts, hence the savings. Talking about AI helping them in terms of their how they're dealing with customers and the voice recognition systems that make things easier and more productive. They've reduced their retail footprint a bit. Fiber easier to maintain than is copper, and on from there. But, you know, Jim, I know you have rarely been constructive on AT&T stock. Right. I would point out, by the way, Stanky throwing a little shade at Verizon, which reported numbers that initially were well received earlier this week and then kind of reversed. Take a listen when he talks about low calorie, pay particular attention.
We now have about 71.6 million high-value postpaid phone subscribers, which is up 1.5 million from a year ago. And these aren't empty calorie additions. Our results reflect the quality of our customer growth with higher ARPU, higher adjusted operating income, improved margins, and lower postpaid churn.
So, sort of trying to draw a distinction there between what I guess they believe were lower calorie additions at Verizon. Overall, and this gets you to Apple a little bit as well. Consumers are holding on to their devices longer.
Yes.
The upgrade cycle is taking longer. You know, since 5G, there hasn't been something that has made you go out and say, I gotta get a new iPhone. And that DeRoches was talking about that. Like everybody, he's waiting as well for What are they going to put out in the fall that's going to have an AI component to it that might get things moving again?
Is that the 0.72 churn, which is incredibly low?
Yeah, it is. Keeps things low. And by the way, since they subsidize devices, it actually helps on the margin side as well.
Right.
Even though the revenue side may not be as high, it helps with margins because they're not initially making the money on the devices.
I give them that. Now, David, let's talk about this AT&T fiber business. You're talking about penetration of 40%, 27.1 million total locations passed. Yes,
Right, so they have the opportunity, 27.1 million locations that they can market to, and they had a significant addition in subscribers to their fiber.
How about AT&T not as bad as we used to be? Is that the headline?
You like that?
AT&T not as bad as we used to be?
All right, I'll give you the last word on that one.
It's good. It's good headline.
Still an important company, obviously. The consumer, again, according to the CFO, remains pretty resilient.
Okay.
All right.
Yeah, it's a good report, man.
Thank you.
Yeah, well, speaking of Apple, we'll get to some supply chain reports about the Vision Pro at least. We'll get Kramer's Mad Dash and the opening bell. Don't go anywhere.
Good morning. I got a pickle here, guys, on my Discord. How do I get these things to go down? Does anybody know? How do I get these things on the screen in the live room? They're all going sideways. They used to come down and give me the names.
Look for some activity in the chips today, as you'll see Texas Instruments in there going to open up about close to 7% with the double beat and guides in line. We'll get the opening bell in just 4 minutes. Don't go anywhere.
I want them to go diagonal. Set a channel status. I don't know how to get it to. Is it your deal or is it me? We got 2 more minutes. Inbox. Yeah, I can't figure it out either. Oh well. So we got a snake with a falling wedge breakout. Now I expect it to break out a little bit or hold the 200 as support and double top pre-market high. We just now broke the 200. If you click voice channels, I do that and I get this. Then I have to detach that. If I push the voice channel. Done about everything.
Let's get to a mad dash and opening bell. You want to talk a little Vertiv? Our friend Dave Cody, of course, is chairman, and that stock has just been on a run.
I think this is interesting. It's a SPAC.
It was originally a SPAC, yes, way back.
David, they have 60% organic order growth. Why? They're in the data center. And the data center, as we saw in the Wall Street Journal, still hot as ever. So I give you Vertiv as being still one more data center play that works.
Look at that's a chart. That's just beautiful. Look at that thing. Look what it's up, 600% in a year.
It was catchable. You could have had it.
I know.
Let's get the opening bell on the CNBC real-time exchange. The big board it is.
Okay, we pull back to the 200. Now.
Winning back-to-back championships. First team to do that since 07 on the men's side. At the NASDAQ, it's
The 521 strike.
celebrating 30 years on the NASDAQ.
Shut. You idiots. I can't take it. We don't, they're a lot stranger than they used to be. I'm in. Oh, I better look here first. .97. April 25th strike, 509 at 97. 3 black crows, I mean, a little early. Okay, double top, baby. 114. $121. Woo! That was impressive. Bingo! I'm off to the beach. Boy, oh, voice, I see. Ah, got it. Dang, man, keep going. AMST. AMST. Nurse Magic employed 2 million nurses of AI tools. Launches around that magic release. Leading artificial intelligence. AMST. You are helping. You got your wish. Randy helped too. I'll give you all the credit. Okay, YouTubers, we knocked one out already. What do? We wait for a few seconds. We got a double top. They're at 507. ABEVC. AMD, everything's pulled back to the 200. That was wrong. That was the 5-minute. Damn. So I got that wrong. BOF has 17 million in volume. BOF contract with largest retailer. Food out branch. 8 million brings 300 total annual value over sales. Oh, this is a small company. 8 million in annual revenue. Well, that ain't bad. BOF. CLSK. Pot stocks are down. Right off my support. Excuse me, snorting a lot. Excuse me, snorting a lot. Oh, get my mic on. NVIDIA knife. I think it can go a little lower. Let's see if we can get a 1, 2, 3 down here, or it breaks to 63. Come down one more time, maybe. That's a suggestion. Then you'd have your 1, 2, 3. You actually have it right there. You got a head and shoulders right there. We'll set the alert at the head and shoulders, and that'd be a high or low. If it doesn't hold the 9 here. NVIDIA. Volume high, Tesla. Jimmy swung this one. The call. And I'm going to open up my other account here. on May 17, 170 strike. What I got? 150. Oh boy! 1645 from 750. God, I can't believe this, man. $16.90 and I paid $7.50 for these suckers. I'm going to take profit. I can't turn down an opportunity like that. BIIB. We got a double bottom on Amazon. Apple double top. We're close to the, well, we're at a pivot point on Meta. And AMD at a 50. Watch 200 here. AMD. I want to swing AMD. So I'm going to look for a swing. D-Dog's a good one. SPY coming to the 200 here. Okay, get ready. Where's my damn? There you go. SPY. SPY the 25th. Oh man, the 509. Gosh, the 510 are cheap, but I don't trust. I'm gonna go for it. 75 cents. NVIDIA. Did I say 510 or 511? Oh shit. CLSK new high. SPX double bottom. Got an ascending triangle set up, SPX. We can drop and hit the 200, is just an option. We can drop and have a triple bottom, and we also are bullish. Very bullish. And I'm in the SPY at 75. Damn it. There we go, baby. Boop, baby. It's a double bottom, ascending triangle, call out. Man, not bad. Keep going, baby. These are the 5-10 strikes on the SPY and the SPX. Where'd you go? Where are you? Out of spite, 92. Yabba dabba doo! I'm out at 92, Mikey. Out of SPY and SPX. Oops. What's not looking good? TNX not looking good? Oh, yeah. Tesla up 15%. Triple bottom, baby. Triple bottom. Triple bottom. Fat bottom girls. Here comes the 200, buddies. Nobody knows about my secret, but us. Where's my... Man, I got so much shit on here. I gotta start thinning this out. Now, how did this get to 1 minute? Shit. 1 minute. What was I looking at earlier? Okay, that ain't the trip. Dadgummit. You idiot. Oh, shoot. Off the 200 SMA. The bounce off the 200 is on the 1 minute. So we got our 1, 2, 3. I think that 506 was an inverse head and shoulders. Yeah. And then it could drop all the way back down here to a double bottom if this 506.05 does not hold. There's SPX. Now there's the 200 there. Yeah, I got there right. That's only 1 minute. And why is the 200 there on that? Okay. You ready? Let me do the shot. This will be risky if I jump in it right at the 200. So I'm going to see. I'm going to wait and see if it holds the 200. If it starts to automatically get a green candle, I want to jump in it. That's the SPX. It's a 5 minute. God, that's a big drop, Zach. SPX. Getting more order ready. Oh, too late. Dead good, you stupid. Today's April the 24th. We got our green candle. Grande. 5100 strike. Little Rondi. You know what? If I ever see Bill Haney on the streets, I'm gonna punch him right in the frickin' nose. I don't like that guy at all. I used to like him, but when he gets mad, he uses the N-word almost every sentence, and I can't stand it. 5100 strike at $3. Lotto. I tried to listen to him talk this morning to Mayweather. Nigger this, nigger that. Just shut up, nigger. Give me just 5 minutes with him, and I'll knock some sense into him. Kind of liked the guy for a while. We got a head and shoulders on the video. Okay, let's see here. Inverse Head and Shoulders. Oh my, 330. Did I put my call in here that I did on the SPX? Bitcoin taking now. To 505. That's what I got, 505. I got it lower than that. I got, what do I got down here? 505.14. Come on, SPX. Show these suckers. You can take these at $3 and they're at $2.80, $2.75. How'd I get it at 3? Right. I should have got it cheaper. I thought well, that's not looking good. Get lower highs. Got a symmetrical flag. Boom, baby. I'll be right back. Oh man, I won't either. I'm gonna stay. Break it. That coffee sat in there for an hour and 30 minutes. That's some well-fermented coffee. Did I turn that up or down? Starting to get nippy in here. SPX at the 200. Okay, you got to hold the 200 beast. If it doesn't hold, I'm going to get out of this trade. I added some more here at 195. Could have got out earlier, but I didn't. No, 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 no. 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 The old support will now become resistance. $507.201. What did I get that line off of? Oh, that support over here. Okay, this is yesterday's high. Yesterday's high. Damn, didn't hold. Here we go on down. There's the pivot point on this flag. $506,601. Do. Well, what to do? I'm going to load the boat when it comes time, I think. I hate to bring it all the way back down here. Damn, that'd be another, would be at $1. It could pop right here off this shoulder line. I guess I had all these other two on here already. No, I didn't. So the Mister hit the 200 twice. That'd have been a great indicator. Now we got snake, breakout, pullback. Mr. Say Mr. What about Uber? Uber have earnings? Was it Uber? Oh, gosh. Josh. Were you boasting about Uber yesterday? I told you so moment. What does he mean? Elon Musk. Let's see what Barron's got to say here about Elon. The children's book Tesla. The children's book about Tesla. Oh, screw you all, Tesla. Oh, I told you so on the Cybertruck. So, here in the past week, 2 weeks, Tesla got bashed hard. The rumor went around saying that he wasn't going to produce a $25,000 car. Elon came out later on a tweet and said they're lying. So now he came out, he told them we're going to start the $25,000 car. Now there's something else. I told you so moment. So here in the past about a month, they've been cracking down and bad-mouthing about the taxi, the no drive, the no person driving taxi car or whatever you want to call it. And they're going to probably have that rubbed in their face too. All of a sudden, at one time they were very excited about this. Wall Street was. Really excited. Pumping it big time. Now, they're dead because Elon's in so control. They're bashing it. So I see things. I remember. I don't have a short memory like some of these traders do. We're being misled. So I've decided as much as I hate it, I'm going to break up with Becky. I like listening to him. I can build a strategy on anything. If I had roaches in the house, I'd probably build a strategy on it. On how to trade. I got to get my coffee. We got Uber here, big old long snake, squeeze, falling wedge. Has to break the 51 or the 50 SMA, 51 EMA to go to the 200 by the end of the day. Uber, I don't trade Uber. What's this here? Server Robotics. Server Robotics, 10,000 public. Uber. There we go. Now we're going to know. See, resistance was so close I didn't want to jump in it. If we break this, I will. Maybe. I don't want to trade Uber. SPY? Is that a trend line? Man, this looks good. You got it already? Ah, Randy. I got the same. Look at this on the SPY. Bum, 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 bum. SPY trend line off the falling wedge might have found support. It's the ascending triangle this morning, the wedge, the falling wedge this morning, that top resistance line. There's your 505.14. There's your 505. Someone in the room in here say 505? On the SPY? Someone did. Or I'm just reading another room said it. Who said 505 in here? $505.92. Yoko, you were off. You didn't get it this time, Yoko. You were close. 507. Oh, 505.92 is the first support. We'll give it to you. We'll let you have it. Pretty red right now, huh? This is it. I mean, this is the final say right here for the rest of the day. My opinion. 505. If it doesn't hold, then we're going to probably have some more droppage. No lower than 504.87, Yoko says. I have 505.14, and we hit 505. And 505, 500 is the number. The imaginary hold number. What time is it? It's 10 o'clock. We're definitely out of support. And I don't like the time of this. The timing's not good. New low on Netflix. It had a nice reversal yesterday and then came back and corrected. Today's losers right now is Humana, Lyft, Uber, Aluminum, ILMN. They were pumping UPS yesterday. New low, 377. One guy said he liked it better than FedEx. We got Lilly down another 14 bucks. Home Depot down 530. You know, I feel kind of validated that I was one of the first ones to call a resistance while everybody else was, and I'm not talking about this room, but all the other fat cats were pumping this market to no end. And they all know that you got to have some kind of correction. So I was first on board with that. And we might, and I think it was it franchise? Yoko, did you say that you weren't really, not really for sure about the bounce we had? This could be short term. Mike said dead cat bounce. Anybody know what a dead cat bounce is? That's new to trading. What is a dead cat bounce? A dead cat bounce is a temporary, short-lived recovery of an asset price from a prolonged decline or in a bear market, or a bear market that is followed by continuation of the downtrend frequently. Downtrends are interrupted in brief periods of recovery or small rallies. So, dead cat bounce. Short-term lived, I mean, I'm real good at them, as you know. Knife catcher. Short-lived and often sharp rally that occurs within a secular downtrend. Secular means down with a little bit of up, down, up, keep going down. Stair-stepping. Like I said, I suspect 2 or 3 days up, and then a B leg on an overall downward ABC pattern. Now this is going to, Home Depot is set up here in the flag. $417 price target, $415 price target. Verizon or Visa had earnings yesterday and we pulled back. Put your fibbies on it, on the run. So we're definitely oversold. Could probably set an alert, I don't know, double top down here. I'll get it off this hump, that hump right there. So now let's have an understanding here today, people that are listening. You saw me trade off of a scanner. You saw me trade off the TV. Now I'm going to trade differently. I'm going to turn off the TV. I'll leave it on in the morning. I might turn on Schwab, but I can't take CNBC anymore. I had a meltdown last week. I really got upset with them. They were pumping the market for 3 weeks. All that time, that one chick had 90% of her position sold. That really pissed me off. And then Josh. He got me mad too last week. So I'm going to stay away from him for a bit. Around 11 for the pump. Maybe we'd do that. They're on right now. Let's see. Here's a guy probably a third of my age talking about stocks. I'm fresh out of college. I'm still a virgin. You're gonna badmouth Tesla, bitch? See how I get started on them? You want to hear that all day?
Well, let's stick short term and tactical. Then it follows, do you buy the argument in Musk's view that Q1 was a bit...
You idiots were wrong. You idiot. See, I can go on. You idiots bashed him last week for the 25,000 cars, said it wasn't going to happen. You bashed him for the recalls and the stock's way up. Wow. Thanks, CNBC. I made $1,000 off you yesterday. I've never made $1,000 on an overnight trade. Well, I have, but not very often because I don't swing much. They won't shut up about Tesla. I would really love to hear them talk back everything they bashed Tesla on for the last 4 or 5 months, every single frickin' day.
Fruition within the next year or two.
Yeah, I think it improves investor visibility that we will get some new models. I think
they want new models. They want this. They want that. Okay. Goodbye. I will not be discouraged by you idiots. I doubt it. They don't know that I've been trading this thing for 13 years, 14 years. So we're waiting for my alert on Visa. It had good earnings yesterday. They were boasting about it big time. Had a big spike. And I'm going to wait for almost the bottom of this channel. We got a rising wedge right here. And that rising wedge can now become... Oh, whoa, hold this. I just now thought of something. I might be at support right now. No. I'm going to put support right here. This is the top of that wedge. So this is called a rising wedge. This is resistance. What was resistance now will become support. And if you can count to 3, you can trade with me. 1, 2, 3, boom. And if you can count to 4, you might make a little bit more. Oneness, 2 bits, freebie, forest. So that's a rising wedge. And we're going to pull back and hit the top of that rising wedge. And I got to raise that support up above the wedge. Damn, Jim, you're smart. Go away, little girl. I loved Marie Osmond. I loved her so much that I became a Mormon at the age of 13 years of age. Can you imagine baptizing a kid at 13 years of age, being a Mormon? I've been a Christian, a Baptist, a cannibalist. Okay, so Uncle Zimmy is going to say 275.50. Set your support for Visa. Set alert. RSI. RSI here. Didn't have a bounce there. We had divergence. Oh, look at that. Had divergence. Oh man, that is beautiful setup right there. You got the lower volume and you got the higher movement on the RSI. I mean, that would have been a sweet spot right there. I could see that coming in. You see what I mean? Divergence. Yeah, that would have been a good spot. Okay, room. You know, Mike, we need to kind of clean up this when we have some time. We need to clean up the left bar and get stuff that we don't use out of here, and maybe add just 2 windows, one for alerts. If we get like an alert, we put it in an alert room, in a different room, so people can always know to go to that alert room and look at them instead of trying to scan through the chat room all day long. Just have one alert room where anybody has an alert, they can set it, and it's close to the top of the page. Watch the SPY here. Watch calls. The 507s. Come on, baby. Don't mean maybe. Come on, baby. Lick it. 503.98, and I got a small position right now. 503.98. Let's do it. Trade alerts. How's that? Perfect. Now we got to find it. Where's it at? Is it at the top somewhere? Yep, there you go. So right at the very top of the page, if you have a trade you want to put it in the trade alerts. I'm going to do that right now with the SPY. I'll be the first one in there maybe. To the top of the page. And then, when you're talking about it, you can put your alert in the room or however you want to do it, but I want you to put it in like this, or just say I'm in this trade, and you can type it in both rooms, but it'll be in that one room to where we can always look at it. You can scan through it, and it'll be easier, I think, to get to. Swing, day trade, don't matter. And then you type in the, what do you call that, an asterisk? I don't know what you call it. And type that in right after it. Then they'll know to hit that trade alert thing, and it'll take you right straight to trade alerts. And I'm in this at 108. We're at 112. I should have got more at the buck, but I was yakking. Bunny, 3 white soldiers. Jimmy alerted Uber. Jimmy said what? We're going to 68. 69. Jimmy's looking at Netflix. Amazon. See, AMD didn't pull it off either. $120, $121. La 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 la. Yabba dabba doo. We just now hit my resistance line. Turned down for what? $108 to $121. $123. $125, baby. 2468. Who do we appreciate? Randy. You decided to clear your port. Is that good or bad? 127. We're not shy. We just like to buy the SPY. But if you post an alert, you must give some reasoning behind your suggestion. Yes. Exactly. Doge. Ocean said Dogecoin. 129. It'll be peace in the valley. A 1 and a 2 and a 1, 2, 3. I got lucky when I sold you. All out at 127. Thank you. Oh. BTBT. Jimmy was speaking about that the other day. What did I say? Out 127. Now, let me tell you something. Ryan Garcia is my new living idol. What he did was probably one of the most magnificent plays I've ever seen in sports, ever. I kind of knew, because I used to box, and boxers mostly like to stay healthy. So he put on this charade for 2 months, acting like a drunk, a pothead, says he's going to clean up the world and stop all the child pornography and human trafficking, and just got really bizarre. He gets up there and he weighs him out. He grabs him a bottle of beer and chugs down a beer on the way in. So the other camp, the Haney camp, kind of took it lightly. I mean, they took it not lightly, they took it serious, like he really was kind of losing it. So Haney gets in there and he meets the weight requirements, and Ryan goes 3 pounds past weight. So there was a penalty, there was a bet. If you went over the weight, you had to pay $500,000 a pound. So he gives Haney $1.5 million. Right then and now, he knows that he's a tougher guy because he's got more, he ain't lost that energy. I mean, 3 pounds to a boxer is a lot because you're already tight, and then you got to lose another 3 pounds to meet weight requirement. So it kind of wears you down, wears you out. You don't last as long. You don't have that stamina. So he goes out and he bets $2 million to win. He beats the crap out of him. I mean, just totally beats the crap out of him. And the last fight Haney was in, I didn't think nobody could beat this kid. It was just amazing. It's one of the best stunts I've ever seen in my life. Thank you there, Mannequin. IBM reporting after the bell today. Meta, Ford? You sure? I want to share that in the room. Parge, if you don't mind. This is from a guy on YouTube. I leave the channel on for him and Mannequin. Oh. That kind of looks like my six-pack. Musk lifts sentiment to entire stock market and saying a regular car is like riding a horse. Woo! Okay. That's a good one. Must lift sediment. Uh-oh, spot. She mentioned that one yesterday. Expect to have good earnings. Boom, just triggered my alert again. Three black crows. Now see, Who's got the next support on SPY? Pretty good drop. There ain't really no support. I don't see any support. Got 3 black crows. I'm not in it yet. We're going to double bottom. Snake breakout, pull back. We're going to come back up and retest the 9. We keep a higher low. That keeps it bullish. It's better than a double bottom. Tweezer or tweezer? Tweezer, ER. We're going to know any minute. Now we're a little bit bearish. So we're going to come back down and retest the bottom. Nope, we're not. Good. I don't want to. It cannot go below that blue line. The calls, the 507s, that 93 cents. SPY, calls, April, not 507, April 25th. God darn it, you sucker. Right when I get it. Dadgummit. Well, man, I thought I was getting ready to break out there on that green candle. Oh, 89. There's my frickin' turn line. 86 cents. Dadgummit. It sucks. I got another one. 86 cents. Oh shit, I didn't get the strike. Come on. Pressure's on. The heat is on. Break it. So far it's quick. Mm, 88. It's just the wrong time of the day. It's 11 o'clock. It'd be a lot better if it was 12:30. Because then me and old Warren would be talking with the water cooler, saying, Jim, thanks for bringing that down to the tweezer bottom. Now us fat cats can run it up. And while I'm waiting, I'm going to go into the freezer, take out some chicken soup, and microwave it. Break. Oh, Black Betty, Bamber Jam. Betty had a child, Bamber Jam. We break the 21, and we're off to the races. There we got it. We did it. We broke it. Now, see, that's what I mean by break. You have to have a whole body candle above the trend, above the moving average. And now you can sit and be a little bit more confident in your trade, but we still have another resistance to break. If we break that, I don't think I'm really concerned about the 63. But it can be, because it was resistance here. Now we're at 102. Jimmy's looking good. There's the second crow. We're at the 63. You could make a business decision here if you wanted to. But if you stick with me, you might make more than 3. You might count to 4 and make a little bit more. Break it. Double bottom. High or low. Barely. The heat is on. I gotta get my chicken soup going. I'll be right back. Break the 63. Defrost. How's it work? It's not being very nice. Dadgum you. I was up. One. Oh, 1, 2, 3. This is it. This is 1, 2, 3. If you can count to 3, you can trade with me. An 18. What's this here? NVIDIA? 808.51. I agree. 12:30 is a much better time. Yes. I've really defined the timing. I get a little more nervous when I'm trading this time of the day. It's a consolidation period. Hopefully we found the bottom here on a 1, 2, 3B. If you can count to 3. I think if we break these averages, we'll move. Hike. Not very positive. Hey, hey, hey. I'm not scared yet. I'm not scared that easy. One. 2 bits. Okay. Ah. This is hard to see, but I made a yellow line. Predicted the support trajectory to the penny. To the penny. Oh boy. And Baba's up today. And Adobe. And Baidu. Okay, here's my long leg doji. Now, just leave it. Just leave it just like that. With the buy signal. Get ready. Oh, am I in a spy? Oh, fudge. Come on. Could buy some more, but I got 10 contracts. I didn't buy a lot of them because it was a risky trade, but I'm still holding it. I'm not scared yet. I want to meet Ryan Garcia. Take one of his punches. Ryan hit me right in the kidney, man. Did you see that fight, Mike? That was one of the best fights I ever seen. Not the best, but I mean, the whole thing. The lead up, It kind of reminds me of Cassius Clay and Frazier. But Frazier was much better than Haney. Both of them were better than both these guys, but it was a good fight. Oh, ABVC. I was looking at that yesterday. Still in it. We're at 91, brother. Oh, come on, break it. I want you to break. So bad. Damn. Oh. For me. Oh, yeah. Oh, man. Could have got out even there for a second. Go get my chicken soup. How many minutes now? 5, 10, 15, 20, 25, 30. See, I'm in my trade. Just one more minute, it becomes a day trade. Scalping trades last from a minute, seconds to 30 minutes. A day trade is 30 minutes to the day, and then a swing is an overnight. ABVC. No. I think I mentioned this one yesterday. No, I was... I would have went to that fight, Mike. It was in your hometown, man. I would have been there. I doubt if he finds that punk again. I wouldn't want to fight him again. Or just to embarrass him. What am I doing here? Oh, yeah. Jimmy liked the low float. I'm so pissed off. Jimmy would have been up on this trade. And I was going to swing it. I had an order in for 300 shares. Like... BTBT. Oh, yeah. Resistance levels. Double top. 228. Is that what you got, Mike? To break? Triple top? Quad? 5. 228. Very good. I'm in calls. I'm trying to see if I can get this bottom. It's not working. Been a hard day's night, and everything's alright. I think I'm gonna have to get out of this here. It's gone way too long. Bernie Sanders is what? Oh God, Bernie. Hike. Major indices are fine. Oh man, this is a toughie. I love chicken soup. Home make it. I make it out of a Instapot. I think we've had enough time down here. It's time to start going to the upside. I predict 505. My prediction. So today, we are going to play a classic Walmart commercial. Oh, the meta squeeze is on. Hold on.
The expected move, so call it 4.5%, 5% up from here, which would be an underperformance of the volatility, and then hedging that by buying the 510 calls and buying the 470 puts. So your risk here is to the downside. Like in any butterfly or same strike trade, you really see that peak of profitability where you're selling both the call and the put at the same strike. You're trying to peg that strike, right? That's obviously not very likely to happen, but anywhere in that range, you have the chance to be profitable. And the hope is that if the vol does underperform, that will come out very, very quickly. On this 2-day option, because there's just not much time left, and after the earnings event, that vol should theoretically come in quite a bit.
Yeah, let's break this one down. In the April 26th weekly cycle, so just a couple days till expiration here, it's an earnings example that Nick brought us. It's a skewed or broken wing short iron condor, or on the platform it's an iron condor. We call it an iron butterfly because you're selling the same strike on the call and put. Let's see, selling one of the 510 calls, selling one of the 510 put, buying one of the 530 calls, buying one of the 470 puts. So you've got that short call vertical, the 510, 530, and a short put vertical, the 510, 470. You're collecting a credit here, Kev, of $26.70 on that. That takes your break even to the downside. Nick mentioned risk it to the downside. 483.30 to the downside. Anything above that.
Why is this not moving price? There we go, baby.
That 530
Randy.
upside, your profitability goes down, but the apex profitability at or near this 510 level. Kev, give me your take here on this one, because you still have risk on this trade. You've got about $1,330 in risk per
ready,
below.
set.
Yeah.
Yeah, it's a $20 call vertical. It's a $40 put vertical. It's more than $20, so you have no upside risk. But the downside risk is not small.
Yeah,
right?
$1,330.
Yeah, $1,330. So it's actually got because of where he put the strikes, the 510 strike, it's long deltas, about 16 deltas. So you're collecting theta, your long deltas, it favors the upside with no upside risk. It's kind of in the butterfly family, but it's collecting big credit. So risk to the downside, risk between $27.30 and $40, the width of that spread. No risk on the upside.
Yeah, and this is one of those spreads that has that same common strike, the short 510 call and put on there. You might have some assignment risk, going into expiration on one of those, maybe, you know, forces you to kind of close it early ahead of time in case you don't want to get any assignment risk on that if the market's open. But Nick, just finish up here real quick here on this type of strategy where, hey, you can change the strikes based on where the stock is as you get closer to the earnings results.
Yeah, that's right. You know, I guess guys have been kind of going further out, not really playing that earnings month. I think the balls were so high there. I think you have to sort of take advantage of market situation. You know, they're at the higher end of the range, and that is really because of the earnings movement we saw last time. So, you know, just sort of trying to play the technicals. This would put them back at all-time highs. If they have a great report, that would go, you know, back to that level. Could be some resistance there, was my thought on this one. But you can absolutely structure this, you know, the other way, right? You're always kind of trying to take your verbal sentiment and put that into sort of the analyze tab picture, and then how do you actually put that on so your risk is still defined? So, you know, looking for some upside here, muted compared to what's expected, but then if it does blow out again to the upside, great. You know, if they do have downside, well, yes, there's risk there for sure, but it's still defined risk. So you could always bring that other strike in a bit if you wanted to limit that downside, but that's going to change your credit. So always a trade-off, guys.
Yep, that's what we talk about. All right, thanks to Nick DeGaracos, Managing Director of Market Risk at Charles Schwab, for joining us. Coming up after the break, Kevin and I are going to be joined by
man.
Lifefolio for discussion on Chipotle and the sentiment data on the stock moves. Burrito chain stock jump.
What's rating?
25% so far.
What's up?
Quarter needs after the close. Stick around.
Well, they're not playing at all.
Wrap up the trading day with me, Oliver Renner, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Think or Swim, the award-winning trading platform.
That sucks. It does. I'm still in it. I'm not giving up yet, but I gotta pick my nose. I thought I had it. I was ready to sell it. Because I know it's a difficult trade. One. There's my wife. Are you still telling that same story? Come on, girl. And that look. I can't stand that look. When your eyes twirl back and forth like that. I remember that night. Yeah. You look startled, huh? You invested in me? How much? Fuck. There it is. Let's rechart this. Maybe. We pulled back to shoulder line, or we pulled, yeah, pulled back to the neckline. So this could bounce here. And then you got another one right there. 2 or 3 of them. That's wrong. There's the anchored VWAP. There it is right here. Yeah, it says it. We're anchored at the 500. Right now we're at the 21 on the 1 hour time frame. So I'm going to stay here with the 21 for now. I think that's the 21. Yeah. 21 EMA. Excuse me. Like. Anybody in here ever use the Anchor VWAP? I just started using it this year. Oh, I haven't even had my chicken soup. I'll be right back. I got in this trade. It's a day trade. Been trading with my shoes on all day today. I hate to take these off now. Damn, they've been on my feet for, man, almost 12 hours. So one thing that people don't understand, there's three great things in life that you need. One is a good pair of shoes. Another is a great bed. You got to have a good bed. And then final, well, maybe four, find a woman that can cook. I had that cooking. If you can't find a woman that can't cook, don't go out with her. That or she washes the dishes. I'd probably make that. I had a girlfriend that couldn't cook. God, talk about eating raw chicken and smiling. Honey, that's good stuff. Ugh. Man, I gotta go to the bathroom real fast. I'll be right back. Take it on the chin. We're waiting for this to break, so let's try to find a couple other trades while we're messing around here. Mike got resistance at 228 to break on BTBT, or I do. That Netflix, yummy. So we had a fake out, and when you have a fake out, you get a breakout. So we got to keep a real close watch on Netflix. In fact, I'm going to make a prediction. Jim, you do a lot of snorting. Oh, let me see. Okay, this is my prediction. I'm going to predict a Head and Shoulders. We're going to come down and touch this one more time and then break out, and then maybe come back down again and do a second touch on Netflix. So you have two touches on the right shoulder. That's my prediction. I hated it every time she cooked chicken. Finally, I went in there and I said, here, let me show you something, a little trick. So I put the lid on the skillet. I said, let that sit for another 3 minutes. She looked at me, well, I've never put the lid on the skillet before. That's what you get when you date hillbillies. Most of them know how to cook. Okay. Do. Man, it's been a long one. It ain't going my way at all. still got more time. Target to break 504. BT 229. BT. Such a pretty world today. Netflix came back and did the right shoulder. Yeah, I never did go in there and get my suit. UAL airline. I said it was going to come down. Yeah. They're an Amazon. See, I'm not listening to CNBC. I don't know what's going on. I need somebody that's really tight on news, because that's where I get my news.
Thanks to Ben Lichtenstein.
Got to have a news reporter in here.
Breaking down markets for us. But now let's bring in George Tillis, senior markets correspondent here. George, we're talking IBM. Big Blues had a great run.
IBM.
For the last 12 months. Pulled back a little bit over the last month and a half or so into earnings after the close. What are the expectations? I mean, is this warranted, this move? Is IBM moving into a new era where AI is going to help them? Because, this stock was dead money for 10 years or so.
It was, and I think it's a good point to bring up right away.
20 years, my friend.
If you look at IBM, obviously in the last year, the stock is higher by 45%, which is a considerable move, taking into consideration that the stock really was range-bound for quite a many years because of the
We're on the 21.
business. I mean, ideally speaking, you have to think about the traditional consulting and infrastructure services, their cloud services and cognitive software solutions businesses. They are an AI infrastructure stock. That's something you have to keep in mind. But IBM has gone through a lot of change. And of course, one of the changes they made is they divested of Kyndryl, which is their IT services business. And I do think that that is part and parcel of why the stock has been higher in 2023. Now, not the only reason, but I think that created an outsized earnings gain for the company, which it's utilized, of course, to firm up its share buybacks, as well as, again, pay some nice dividends. But I think it is going to carry through to this quarter as well, but I think going forward, there's a little bit of a concern. So let me explain. One, if you look at the earnings per share estimates for the quarter, it's $1.59, which is a quite nice increase of 17% compared to last year at $1.36. But at the same time, they're generating that on about $14.5 billion in sales. That's only 2% higher than last year's $14.25 billion. So they're coming off a year where their sales has been relatively modest, and in fact about 2.5% for the full year of 2023. generally speaking, their sales growth, at least in the last 5 years, is about 3%, with earnings growth about 4%. So what I actually see is in the last year, their earnings growth has certainly outpaced sales by quite a large margin. And I think it has to do with some divestitures, which have been strategic, because I think the IT services business spinoff was at the right time for them. But I think going forward, if you look at growth rates, they're going to be modest. 3% sales, 4% earnings. That's right in line with its 5-year average. But considering the earnings multiple are in 18 times, that's about 5 points higher than its 5-year average. So what I think is going to happen here for IBM is, excluding some outsized news on artificial intelligence, I think you're going to see a rather modest move post-earnings.
George, this company's involved in hybrid cloud. They're involved in AI offerings. Why aren't they getting more love from the street? And even so, they target larger organizations, whereas like Google Alphabet and Apple, they target the consumer. That makes their revenue stream a little more dependable, a little more stable. Why doesn't this stock get any more love? What's it doing wrong?
Well, so that's a good point to bring up a good question too, Kevin. The company's not growing very much, to be honest with you. If you just look at the sales and earnings growth, again, excluding last year, which was a unusual year, and I think, like I said, it's because of the IT services spinoff. It's just not growing very well. But that's okay, because if you are looking for yield harvesting, this is a place to be, because they're paying in dividends about $6.64 a share, which is a significant portion of their total earnings. It's close to 70%. So, based on the divestiture of earnings or patronage in earnings in the form of dividends, you're going to see a stationary kind of stock price-wise, and that's probably why the analysts don't have aggressive price targets on it. So it's not growing very aggressively. It's a pretty steady income-generating company. And I think you have to kind of include it in the realm or basket of investments in that category. I'm going to divert here for a sec, but Texas Instruments as well. If you look at that stock, the last 3 years, it's really been in a trading range because of the same conditions. It's a high dividend-paying, high-yield company, but its growth rates really aren't manifesting into solid parabolic trends, if that makes any sense.
Yeah, and I think people like to look at the PE of IBM. It's relatively low, compared to a lot of competitors in hybrid cloud, in AI, in the consulting industry.
They're in all the right categories.
Right, and it's had a great jump over the last 12 months. All right, great stuff as always. Thanks to George Tiller, Senior Market Correspondent here, breaking down IBM. Kevin, I wanted to bring up a chart before we get into the example trade, a 15-year chart. And this is kind of what I was meaning about it was dead money for years. That all-time high of in 2013 of $206 per share. We're 24 bucks off of those all-time highs, basically 11 years later. So this stock, besides the last year and a half, this stock had been dead money.
Remember, this was a company that was old school, and they transformed themselves to the cloud, and it took a while.
Long time.
It took a long time, and it was a much bigger deal than everyone thought.
Quarter after quarter of decreasing revenue.
It would seem like forever. It became a news story every quarter.
Right.
That another quarter of low. So yeah, it was a long term. But it looks like, at least by the stock activity, that they've got something turned around here.
Right.
And like I said, they're in all the big categories. They're on the pulse. But yeah.
Yeah. Let's get in the example trade, because this stock traded at 199 bucks just about a little over a month ago. So I looked at a strategy. If you think it's going to rebound, a lot of their bookings last quarter were from AI and attached to their consulting business. If that picks up, we all know AI is picked up as far as companies spending on it. So I looked at a call diagonal to the upside where it can offset some of my costs on a bullish call. I went out to the May 17th monthly cycle, so just about 3.5 weeks to expiration here. Bought the 182.5 strike call, that's basically at the money. And then I sold in the near term the April 26th weekly 192.5 strike call, $10 wide bullish call diagonal to the upside. We got a 480 debit on here. I think it's trading closer to 450. The stock has pulled back a little bit, but the debit you pay is your risk. So $480 per spread on this one, break even of about $180. Kevin, This one sets up, as in my example, as the option market's priced in about a plus or minus $10 move. This sets up to the upside, where if you think it's going to go at or near that 192.5 strike, it's a trade that is profitable at those levels, but your break even, just below the current share price.
$10 diagonal, that's a 3-weeker, so it's a little, there's some duration here, but it's trading only 450. So it's trading relatively inexpensive. Some of that's because of the earnings play, but yeah, I mean, you're going to have some chances to extend duration here on this for sure.
Yep, and to Kevin's point here, as you get closer to expiration, April 26th, in 2 days, you'll have that ability to roll or adjust that short option.
1, 2, 3.
Another week, or closing the trade if the market's
Come on, baby.
Liquidity. This
is it. If you can count to 3, you can trade with me. We want the 200 SMA. Hey, get out of my way. Just got back from the USA. Break the 1, 2, 3. And let me be. Blake it. There'll be peace for me. Oh. 90 cents, come on, man. Need to close above 503.98 on the 3-minute for me. Thank you. Pay attention. These are warming up. Pay attention. You're starting to sound like Vegas. She's telling me to pay attention. You know what I'd tell her? You'll eat what I tell you to eat. Blake it. We're going to Blake it. Yeah. CPS. Always clean. This Jim. May I help you? Huh?
Hi,
Who?
this is Maren. The reason for the call is there are some new
Yeah.
approved $0 premium Medicare benefits in your area that might be available to you. Do you have Medicare Part A and B?
I don't know what that is. How old do you have to be to have that?
Okay, let me transfer your call to my senior supervisor who will further assist you.
I am a robot. I am programmed to receive. $102, baby. I'm up $200. That'll fire her up. Man, my hands are sweating. It's not good. Oh, come on. We're going to respect the trend line and then move up. This has been them kind of day here. How am I feeling about Meta? I feel that we're overbought, but everybody's bullish on Meta. So my opinion is, this is what I have charted. We have a Darvis box, and we got to hold this support. This is the old resistance of a 1, 2, 3 breakout. Boom. So that's an upward sending triangle, kind of an upward wedge. We got to hold 483.33. If we don't hold that, I think we can drop to 452.98. Now, this thing's up huge. It's the only thing that scares me. I've not really called a bear on it yet. I think I might have, but I don't remember if I did. So I'm thinking, I mean, look at the stock. You just look at the, I'd wait. Personally, we probably could double top 527. Find a shoulder line at 522 for Meta. If it bounces off and it holds 483.33. That's my number. Support 483.33 to hold. Now this could have a big downturn because it's up so damn high. So it has to hold 483.33 and resistance to break. I don't want to trade it. I'd rather wait and find out how earnings reacted because it's so high. The earnings are going to probably be good. They're always good. Always. Oh, you are? Man, New York makes some good pizza, I heard. This number went to 45657. Oh, never mind. Not as cute as I thought it was. We're at 102. So we've got the 200 right here. So I took some out of the 200 right here. If we break this 200, we could break the VWAP. BTBT 230. What? How'd that happen? Okay, I'm going to go ahead and all out. I don't want that on there. Oh, there's Beppy. I love that dog. Best damn dog man ever had. His name was Beppy Gambetta. Run with the wind. How does that go? Run, jump with the wind. There goes my friend. Name was Beppy Gambetta. Best damn dog man ever had. Stand up and grab him. Spy overhead resistance at 5. Ooh. Yeah, I should stay in the trade. We'll do it. I got a little left. Break it. Damn it. Watch it break out. And I'll say, Jim, you sold too many contracts. You could have got $7 does. I still ain't got my chicken soup. God. I've been microwaving that chicken soup for an hour. I ain't kidding. 45 minutes. This will be some good hot chicken soup. $108. Snake, breakout, pull back. Netflix broke out. Jimmy caught a wedge. Uber almost hit my support level. 110, come on, baby. almost forgot about my soup again. I microwave my chicken soup so much there ain't no juice left. No. 114. Woo! Damn! You still gonna buy me that boat? I've been waiting for that. Or that house, that yacht. You get me one for about 250 grand. Ladies and gentlemen, the 507 calls are at 117. You say you hung out at Diddy's house. I heard that Ellen DeGeneres hung out at Diddy's house 17 times. Had premarital sex with him. They're both gay. Gangsta Diddy. I'd tease him so much if I was a gangster. I said, Diddy, come here and tie my shoes, nigga. That's what that stupid Bill Haney's got me saying now. 120. Woo! $122. I'm a jack of all trades. We just hit the VWAP. Spy hit the VWAP. Out. Hello, Jen. Hope you're having a good day today. I am no longer turning on CNBC, so you won't have to listen to me go crazy. La, 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 la. It'll probably go higher. I wouldn't doubt it on a day like today. But I can't. Oh, how long's that been up here? Ah, shoot. 137. Okay, you idiot. My name's James Howard. I was born on the idiot farm next to the Heart Fits. My dad used to say, I don't want you down the street playing with them Heart Fits. What do you mean, Dad? That's my best friend you're calling a Heart Fit. See, I just sat here and got out. I was told to stay in the trade longer, and I respect the person that told me that. And I sold it like an idiot, and now it's at 142. So Mike, my apologies. If you were a girl, I'd kiss you on the mouth. I knew I was. I knew I was very close to pushing my luck there. You gonna cry, Yoko? Along with me? Please. We can get back in it if it touches the VWAP. There we get back in now and take the risk. It's 505.90. I made this chicken soup with turmeric, garlic, a little bit of cumin or whatever you call it, not much, carrots, onion, celery, noodles, salt and pepper, and a little bit of spit, about a tablespoon of spit. Now okay, month after month after month after year after year after year, they've not let down on Tesla. They've not let up on Tesla. Fat cats hate this stock. I think they purposely brought it down. I think they're jealous of Tesla. They can still bring it down more. We had a nice little breakout, and when you have a breakout, you get a pullback, right? Snake, breakout, pullback, boom. So let's look at the 20-day 1 hour. Snake, breakout, pullback, boom. So we hit the 200 and broke it. That is encouraging. Now these guys might be sucking their thumbs. Even the guy on Tasty Trade, one of them's bullish and the other one's bearish. And I think I'd rather listen to the one that's bullish than over Tom. Tom buys all these cheap stocks and just adds on to it, and then eventually it pops. He's pro-noun Wall Street trader out of Chicago, I think. But he was very bearish on earnings. I wasn't. So he's probably really hurting today on this trade. The other guy, Mike, made the right decision. I watched that video. Mike sent a video about Tesla to me. There. Trade idea. And I'll put it in here in the room. If he might have already done it, but I'll put it in YouTube also. I took the trade because I figured their earnings were already baked in because it had such a hard sell-off. I was pretty confident that we were going to bounce up no matter what earnings were going to be like because we had such a hard sell-off. Oh, you already put it in here? Oh, that's not the right Jimmy. Whoops. I don't think Mike would mind if I share this with the room. The video almost to VWAP. Dad, 156. Well. Mike was right for once. You like that, don't you, when I compliment you? Oh yeah, I was going to send this to YouTube. You've been on the spot today? Hell yeah, I have, mannequin. Be careful. I wasn't spot on yesterday. I wasn't feeling, this is something I want to talk about. If you're not feeling good, or you got something on your mind, or outside of trading, or you just don't feel right, it's sometimes best to just sit back and smell the roses instead of try to do what I did yesterday. I mean, I was miserable. Just not feeling. Probably because I wasn't stoned. I don't know. I just sat here like a lump on the log. I knew I shouldn't have took the trade. The first one I did, but I did, and I got out. But other people got stuck. So I got to be in the right. I got to have a good attitude and to be in the right mood. It really makes a big difference. If you're fighting with the old lady, or you're on the rag or something. It's always a good time and a bad time. Man, that was a beautiful trade. That really is. We nailed that. If you can count to 3, you can trade with me. And this sucker, man, he just left so much money on the table. I left $800 on the table, Mike. Yeah. Damn. What was it? What was that again that got you bullish on this? What was your indicator? Say we're going to hold on to them. Overhead resistance. We hit that. What was the next one? Oh, fan leg. We might have to get you on here to show us how to use the fan, where to put it, where to place it. I think. Yeah, I don't know. I don't know how to place that. I see a triple top too. That red fan line above the white one, that's a triple top. Right there. Break that, you get another triple top with a higher high. Not much higher, but a higher high. Damn. I hate myself sometimes. You know, $800 would have paid my rent. I would have paid my rent in 3, 6, 20 minutes. Yoko probably got in it again. Why'd you get out the VWAP? I had some extra ones, so you know I didn't do bad, but yeah. That's a fact, Jack. Where do I live? Springfield, Missouri. I got a small studio apartment, brand new one, for $850 a month, and then about a $50 utility bill, and that's, to me, that's expensive here. A lot of you suckers moved out from the big city and moved here to Springfield and raised our rent up. You hoodlums. And then we got a bunch of crackheads leaving the big cities coming here. Because they got too many warrants and stuff out for them, and then they come down here and play. We're rated number 5 in the nation per capita of one of the meanest cities in the country. One of the stupidest, let's say not meanest, stupidest. High murder rate. Man, this thing's at 162 now. I just can't fathom why I do this all the time. I mean, I sit there and I punish myself at the bottom, and 35 minutes of worry, and then all of a sudden I hit my resistance and I get out. And I'm going to stop talking about it. I'll turn on CNBC. That sucks. Damn it. I hate me. I hate me real bad. You can't even look. Don't look at them. They're at 175. I'll tell you where they are. I'll rub it in. Hey, Yoko, I could probably tell you that I've left at least $5 million on the table. Here, especially, probably about, 1.5 million in the last 2 years. I've called some calls where I get out with $1,000 a contract profit, and then it runs up to 5,000. Tesla ran up to 10 grand on me one time on a contract. I got out at a little about 48. I had 5 of them. I'll never forget that day. And it went on for a couple weeks. Here on the run up, I'm leaving 30, 40, 50,000 on the table every day. Because the run was so irrational. Next time we do something like that, I'm gonna be heavy on it. It's like today. Left 1,000 on SPY. So I nail the bottoms, and I'm up. It's different when you get down here and you nail these bottoms. I mean, you're at the lowest price. Everybody else is, maybe stuck in it or something, and getting out at the VWAP, all of them, it's just gotta. Oh well, it is what it is. KDP.
These companies as consumer staple businesses that don't grow very much inorganically. They do grow through acquisition, but they're more of a income-based property because they pay patronage in the form of dividends versus growth. And we talk mostly about growth stocks, but this is a dividend-paying stock. And like I said, when you pay out about 3/4 of your income in dividends, you don't necessarily see strong trends, and that's why I pointed out the 5-year stationary trend that's generally sideways.
So for that reason, George, is there a different mindset then to sort of think through with Keurig Dr. Pepper as far as like trading or investing in this name around its earnings? Because I think, to your point, these dividend names typically aren't ones you're like, seeing a ton of volume around their earnings eventually, historically speaking.
Correct, and that's I think the moral story today is to provide context of what type of stocks we're looking at in this case, because the company is more of a dividend or income producing stock. You're not going to see much volatility around earnings. Premiums for selling, let's say, strangles or straddles around options, around options or earnings days, for instance, aren't very robust as a percentage. Let's say considering meta platforms, which we know is a pretty aggressive mover. So overall, good brands, good profitability. Looking at net income, 15% on gross margins of about 55%. And in fact, their net income margins have improved as a business by about 2.5% over the last 5 years.
Yeah, a couple things I'm looking at too, and maybe the company will provide context, George, as we say goodbye. A lot of their growth is actually from price appreciation of their products, not necessarily volume. Yes. So I don't know if that's a return to office situation or perhaps just a consumer who's trading down to more value products. But
is that same day expiration, Yoko, on the SPY? You trade the same day expiration? I always trade the next day out. Look at the next day out when you start trading. I mean, just experience, just kind of watch it. The SPX, I like the same day, but that SPY, it's hard for me. After 2, always next day. Very good. What the hell are you doing? Snake breakout pullback on SMCI. Hit my support at 710. I don't know when I put that on there. Why Wimi Technology shares are trading higher? Yeah, no reason. Oh gosh. Launches, okay, launches Claire, a real estate first all power zero commission smart buy agent. This is called what? AI. I heard that AI is going to generate the beauty pageant. We're going to have an AI generated beauty pageant of fake women. What they've done to the woman is disgusting. I love the woman. Soon they're going to be gone. Instinct. Not many around. Start wearing pants, taking off their bras, and growing beards. I want the woman to stay. I love the woman. Please don't leave us. SPY close predictions. Well, looks to me like we hit one already. Take pictures of them. You won't see them around probably another 20, 30 years. I heard the other day that what was that? It really surprised me. I heard the other day that Caitlyn Jenner was coming out in the press saying that Bruce Jenner had touched her. And that there might be a lawsuit. SPY prediction. We have to break 507.63. So my prediction is resistance. You ready? I see a tweezer top. $506.78. We might have hit it already. Because that's your shoulder. Yeah, we could have hit it already. There's your shoulder line right here. I changed it. 506.57. $506.88. I got 78. I'm changing it to 57 because it's a shoulder line. Can I do that? Am I allowed to change it? $506.57. Now it's gone. Oh, we still, well, we got a couple hours still. Support is going to be right here at 505.06. God, what happened to Boeing? Downgrades. They had real bad earnings. Had no guidance. Though they did talk about their long-term guidance. They burnt through $4 billion in cash, where they only burnt like a couple $100 million last year. Boeing says Ibner has disputed company's rights to terminate deal. So I don't know what that crap is. Air Force nears fighter drone award. Does Boeing first quarter beat offer a buy? No. It does not. Plus, the CEO left, and I remember his big speech. He's going to stick around until he got it right. And then he left. 2 weeks later. There's a lot of bad stuff going on here. I want 125. You know, I didn't trade Tesla almost all year. Only traded it a couple times. And I waited for yesterday to trade it. Heck, you can't fight the consistent criticism and lies. Now they're all, I wanted to watch CNBC today and watch all their faces kind of, give that dumb look. Because everybody they bring up, they only brought maybe one or two people on there. That little China guy. And, no, not the China guy, but the little bitty New Yorker. Imes or whatever his name is. So now they're pumping Boeing. Even Tom's in Boeing. I'm going, what the heck's he in the stock for? He's so accustomed, been on the floor so long that he's used to these tickers, and when they drop so hard, it's kind of hard to resist to buy them. So he just holds them long, just like Buffett does when he's in the red, or all these people last year, the year before that, when they were all red and holding on to their tickers and buying the dip. So we got 211 right now. I think this can go down more. They're going to try to pump it, but the earnings were bad. Bad. There's the neckline. So we broke that support. That was a major support right there. So it's kind of hard to find anything in here. Maybe right here. Here we go. Somewhere around there. Maybe 140? God. Huh. Let's go back a ways. Let's go on the yearly. Oh, that's 20 day. 20 year. So we got the 21. Okay. I can. Oh, I like that spot there too. I like this a lot. Anyone playing Meta earnings? I'm going to wait. They're probably going to be good. And if we've had any kind of pullback, it'll probably bounce back to a double top. They're wanting an excuse for Meta to break. Personally, I can't trade it at these levels. I gotta have a knife. But they've been pumping Meta. Two quarters will be trading Tesla, I am guessing. Me too. So I'm charting up Boeing, and I want to give you a pointer. I didn't start doing this until this year. Jake from Trend Spider had put a chart up on a yearly candlestick. And I never thought about using them yearly candlesticks to chart up. I mean, I have, but not the candlesticks. Like a 20-year daily time frame or something like a 20-year monthly. So as I look at Boeing, I know the earnings sucked. We could easily hit 155.61, and we got a gap. We got this here hammer, and we got this big old long leg, whatever you want to call it, engulfing candle, and it pulls back right into between them. This is 1 year, this is another year, and it went and continued up from that previous resistance. So we could come down and touch the 21. I'd set an alert maybe above 155.61. Before it hits that 157.57, sounds good. So do you understand what I'm saying? It's similar to that. I sometimes use a 24-hour candle setting on toss. They have a 24-hour candle setting. That way you can get both the overnight and trading hours in one candle. And it often helps me quickly see support, resistance, trend lines in a better way. Try it when you get a chance. So that's a 24-hour candle, people on YouTube. Toss says it has it. I'll try to look it up. Spy back at it again. Boeing. Looking at yearly. Damn it, I put the wrong number. 157. And then 57. Now, don't tell me Jim Cramer left me. I'll have to piss off. No, he didn't leave. Oh man, I didn't put the... Do-do-do-do-do-do. Ford. Boing, boing, boing. Watch them dogs a rolling. Rawhide. Today, we're going to listen to what this girl has to say. She works at Walmart and can't pay her damn bills. So I'm curious. I worked at Walmart.
Just to barely be able to pay my bills. And that is what you created, not Gen Z. We're just here getting started. You've been doing it for the last 20 years. You tell me how it got ruined. We can sit here and we can call Gen Z lazy all you want, but you let the economy turn into what it did.
You're right.
Let it all run to hell.
You're right.
And now it's Gen Z's fault because we don't want to work to fix your mistakes.
Well, that's not the... You're at the wrong... No. Young lady. It's because our government overspends. You wouldn't have this high inflation if they didn't overspend. China. We spent $98 billion in one day and sent it to Ukraine. So, honey, your pay will probably drop more because there won't be less goods sold because we might be heading to a Great Depression. Unfunded liabilities, 300 and some trillion. Deficit right around 36, not counting another 5 probably after this administration. So yes, you're right. It was our generation that screwed you up. And I'm not part of it. I got a disclaimer. I feel sorry for you, honey. But you are right, almost.
Services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Verb.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging.
Number one commercial is gone. Verb. Boom. I feel sorry for our kids. I really do. I mean, they don't deserve what we've done to them. The newborn, can you imagine what they got to wake up to? Ah, darn it, Spy 131. I was going to take these. We didn't quite touch the 200, so I didn't take it. There's your 3 black crows again with a tweezer bottom with a descending triangle. But now it's bigger than that. Could be descending. We'll just call it bottom. So it has to break the 20, the 63 or the 21 EMAs. And we're squeezing when you're in between the 9 and the moving average. So something's going to happen within a minute. Either up, which I think could be down. I wouldn't take it here. $127. It'll be peace on the earth. Ford earnings coming out. AMD just couldn't do it today. And Amazon, Apple did though. And Meta down. Meta could bounce. I'd like to see it drop a little bit more, so I'm not going to take the risk. Earnings will be good, but is it overbought? Are we going to go into a downturn? The CPI or the PPI numbers were down again, so that means we're slowing down again. Inflation, a little bit. So I don't want to trade it at these high levels. I just can't do it. Hello, it's Retail Traders. Yes, this is Elvis Presley. Thank you very much. I want to know if you have any peanut butter and jelly sandwiches with banana. Gotta have banana. Okay, get ready. We're heading to the 200. Jimmy said it. Are you ready, Mike? Once again, the SPY held those fans. Damn, Mike. Mike has the answer. Can you show us on that where you how do you, well, I want to know how to set your fan. But I don't want to know right now because I'm getting ready to take a trade for double bottom. The SPY, the 507s. We want the 200 SMA. Oh, there it is. Okay, get ready. Cashing in on Tesla's post-earnings bounce. Ben, see? Intelligent investor. He's intelligent, he says. I don't think so. He's not as smart as me. Come on. Give it. Give it. Give it. There we go. Damn it. 1-4. Okay, there it is, 6. I could have got 104. Damn, now it's not. I got to stop this. We're at the 200. Oh, stay in it. Ooh. Yeah, we're going to drop more. got to hold this 200. I can't get another candle below it. There it is right there. Damn it. $106, and there we go. They can easily drop down here. That's my problem. Easily drop down there with some big candles. Still ain't got my candle below the box, so I can't get out of it yet. I don't want to get out of this trade until I can see a bodied candle below it. That'll keeps me in the trade just in case of a fake out. So you're gonna have a whole body. We're back to even. Come on, baby. Don't say maybe. Come on. Come on, baby. Don't say maybe. Hello, darling. Been a long time. That's Conway Twitty. Bouncy, bouncy. Bouncy, 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 bouncy. Off the 200. I should type that in here first. 117. Ha ha. Do it. I don't mess around. I don't mess around. No. Oh, come on. Jingle bells. I don't mess around. I tried to, it was too late. By the time I got my hand was on the mouse, but not in the right spot. Gold pulling back.
What we were just talking about with the S&P. So in many ways, yeah, weakness today in the last couple days, this week really, since those tensions over the weekend eased. But here you can see still very much a bullish pattern, right? We've run up off the lows that we saw back in October of last year, similar to the S&Ps, right? A strong move off the fall lows from last year. 1823, look at this, record highs 2448. I feel like any move seems like a big deal, right? When you're coming off all-time highs, whether it's indices or gold. So that's a record level here. I think, again, to see a little consolidation up here would be very healthy and supportive of the idea that we could still continue to see gains over this longer-term trend, which is very easily identifiable to the upside here, Nicole.
Yeah, and we had a great conversation earlier when we talk about, you know, these precious metals and what's been going on in commodities. We had a great conversation with Don Kaufman earlier today. I mean, and we were seeing his bullish call on SLV. So everybody can keep an eye on this group overall. Ben Lichtenstein, thank you so much. Tech time.
It did pull back 50%.
So ready, right? Meta.
From the last support.
Google. The earnings are due.
Today.
And really can
I want to catch it on the 9.
one way or the other.
I'm not going to trade it too damn high for me. I can't set an alert.
Thank you so much
Or
for
can
being
I?
with us. You know, it's palpable because the tech stocks are something else. The financials kick it off, and those are exciting, and we love to break it down. And
22.75.20. I think it could go down more.
Make this market run hot or cold, right? How are you?
I've seen these gold runs before.
I think the setup is quite favorable for tech. The revisions trend coming into this earnings season has been positive for the 11 in particular, and for the tech sector as a whole. And it appears positive sentiment about earnings outlook is spreading out of tech and going into other areas. Obviously, energy has been helpful, and that has its own dynamic. But on the whole, I believe the outlook is positive, and we should see good numbers from the tech sector. Though, with estimates steadily having risen, the question is if the actual results will prove to be
And no soup for you.
for numbers.
Look, I mean, to your point, people are feeling positive, and more so even for the back half of the year, and they think AI is still here to stay, the AI craze, and a lot of positivity. I'm not really hearing a lot of negative about these kinds of names. That being said, there is always the concern that people are too optimistic or thinking things go too quickly. I mean, we did have a pullback, which makes them a little more realistic or better value at this point. So let's start with these. I mean, today, Meta, They're whisper numbers. Is there something in particular you're looking for? I mean, you had the legislation on the TikTok ban today, though that seems to be so premature at this moment. Meta didn't benefit from that right now. What are you looking for in the Meta numbers today?
So I can't speak to the specific numbers, Nicole, but overall, the revision strength for Meta of all of these Make 7 stocks has been the most impressive. Whether you're looking at the estimates for Q1 or estimates for 2024 and 2025, the positive revision trend never slacked off over the last 4 to 6 months for Meta. We've seen that for Alphabet as well, particularly for NVIDIA as another player on after Make 7. Not so much with Microsoft and Apple, and definitely in the other direction for Tesla. But Meta is in a sweet spot at present, and if they can
sweet spot
ahead of even these upbeat expectations, that will really be an impressive feat for the company itself, and I believe will have read-through for the market as well.
No soup for you.
So you said, Alphabet, Google, Meta, and Meta in particular, most impressive, and some of the outlook that doesn't seem to falter too much. And we know that they've really been the year of efficiency and Uber focused.
My bet we're going to retouch his
down arrow.
63.
I would love to hear more about Microsoft.
Maybe not. We're at the Darvis box support.
Some of your thoughts on Microsoft, where that's headed and why. What's going to drive Microsoft?
Think about that.
Well, there will be a lot of commentary, I believe, that will either reinforce and confirm the almost perceived AI leadership role that Microsoft seems to have kind of adopted relative to Alphabet, at least in the
it's set up in Snake.
Of what this Microsoft versus Alphabet race
To double top.
appears to be. Microsoft
At least.
has a lot going on.
Go for it.
Obviously, it's core recurring.
I'm gonna do it.
Almost annuity type of.
I'm gonna do it.
That with the transition to cloud, then on top of that you have that piece going, and then obviously now the AI team. So to the extent that Microsoft can keep the excitement going, showing to the market that it has a viable enterprise plan to monetize these AI tools.
These things are too high.
And
550 strike.
And business models. I think that should keep the excitement going in the Microsoft story. It has been an amazing run in Microsoft ever since Satya took up the stock.
So it sounds like you're generally positive on tech or most of these names going forward, 2024, 2025. Would that be right, Shiraz?
It is. As we look at the bottom-up estimates, Nicole, tech is the one area that has consistently been showing positive revision strength. And this is a trend we have been seeing for the past 6 to 8 months. As I've shared with you and your audience here as well in the past. And it's that positivity that's now expanding to other areas. And we are seeing that confirmed in actual results. I mean, with these companies, with Meta today and then the others, and see how they meet these expectations. But going by the last few quarters, if that track record is anything to go by, we can reasonably say that they have the wind at their back, and they have firmly come back into growth mode, and they're way past that post-COVID kind of adjustment phase when they were atoning for the COVID growth during 2022 and part of 2021. So yes, I believe the growth momentum remains in these major tech players, and then within the broader technology space as well.
Just trying to run him off.
Yes, thank you so much, Shiraz Mian. Thank you.
You don't make no sense, sir.
Really appreciate it.
We couldn't understand a word you said.
Chat with you. Thank you. So Tesla's at 161 right now, folks. And so it's certainly doing well, up 11.5%. Our panel, Garrett Nelson and Steve Wesley, are next.
Dear. Perfect timing. Okay. I'm going for it. Probably a bad mistake. Call. I'm going May 3rd. It's pulled back, so I'm going to see if I get me a bottom play on it, baby. Meta. Yeah. Meta baby. 610. Okay. I got choked up over that one. Oh man. Let's turn 100 into K. It's day.
Might help lower the bar for our big tech companies over the next 24 hours. But the dollar's bid and bonds right now are trying to break through support, resistance for yield. That means that any of the data points, GDP tomorrow or inflation on Friday, if those things are warm, it looks like bonds are ready for a fresh break down in price, break out in yield. We got a good conversation coming up this afternoon. Ross Gerber's going to talk Tesla with us. Martin Norton's going to talk about the macro situation ahead of GDP tomorrow. Right now I have Kevin Hanks, host of Fast Market, Jenny on deck, talk some of the news and movers this afternoon. Should we be rooting for a sell-off here, Kev, to make the bar even a little lower for our big boys?
There was
Meta,
I don't
Alphabet,
think so.
Microsoft.
I think they've already backed off a ways that could. Remember, you had the S&P down about 5.7%. You had the Nasdaq down about 7.6%.
Yeah, these were the winners. I mean, Microsoft's
we're not
off.
in the woods.
Meta's barely off. Alphabet's like still looking great.
Meta's going to be a key one because
Meta's going to be a key one.
Meta seems to be not only dominating digital ad spend, but digital ad spend itself is getting bigger and picking up pace, and looks like they're picking up market share. That's why I think that is so key, because as high as remember, yesterday was the low bar, right? And we had our relief rally starting this morning. Didn't get it exactly the way we wanted. We got one, Tesla, pretty solid relief rally in Tesla. Now we get to a much higher bar for some of these names. Meta today, Chipotle has got a pretty high bar.
Yeah.
IBM, no, not as much of a high bar.
But it's been a good stock.
But it's been a good.
Last quarter was a big winner, IBM.
Yeah,
for the all fun names tonight. But Meta is what's going to drive
Meta is the high profile name today. And then tomorrow, Microsoft and Google Alphabet.
Yeah.
Those are high bars across the board.
Yeah.
There.
Especially
so
for
now the narrative
Alphabet.
changes, right?
The chart's like right below the highs.
The bar is high doesn't mean it can't be beat, right? We thought the bar was high in NVIDIA the last couple quarters. So doesn't mean they can't do it, especially when AI is concerned. Remember, the next three big names we got coming up, AI plays a significant role in all three of them.
Yeah.
So there is going to be that.
This is the test to know if that is still a big enough force, because now backdrop is not as easy. We've got a real serious volatility uplift in the bond market over the last 2 weeks. So
right.
that's
And
where
we
it
are
against us.
we are auctioning record amounts of bonds and notes. So there's also that out there.
Today,
and then
though,
you've got data coming out on Friday that I think the market today is looking to the rest of the week going, well, there's a lot of hurdles to get over the next couple of days. So earnings is one of them, data is the other. I think
Those auctions, twos and the fives, didn't seem to make a big kerfuffle.
no, actually the two's pretty positive for record amounts of cash raised. I don't even know how to spell kerfuffle. Is that a
My Larry David.
K-E-R?
No kerfuffle.
Is that a K-E-R
Yeah.
fuffle or K-E-U-R?
Whatever it was, there was none of it. Bond auctions
You're right.
have been
You're
innocuous.
exactly right.
So,
God.
So far, so good with that aspect.
yes.
But boy, earnings. Remember, earnings.
7 years tomorrow, though.
Yeah.
So we're not out of the woods for the
7-year
bonds.
notes not as high profile.
Market
as
freaked
the
out about the
5s and
7-year in 2023. We did have one panic around.
I wouldn't wait. I wouldn't hold my breath for that. 2 5s and 10s are big ones.
Yeah.
7, kind of an outlier.
But we've also got GDP, we've also got personal income. So the point is, we are not done with the macro yet.
No, right.
For this
exactly right. There's still things that can, like we used to say in the trading pits, still time to screw up your week. Right? There's earnings, there's data, there's a lot. We're in the Fed quiet period right now. I'm not expecting anything to come of the next Fed meeting, so I don't know why that matters.
Yeah.
But still, there's plenty. And you know what I liked about today from a trading perspective? This is
I'm
me
getting mad
being,
now.
selfish. Up, down.
Meta's at 635.
Down, and we're trying to hold here to the end of the day. Action back and forth, that's really good and really healthy for the market.
The funnest way possible to get to roughly unchanged on the day, with basis points of movement right now, basically with the exception of the Russell. All right, Meta, the opportunity to reclaim the narrative for bulls ahead of a busy 2 days of economic data.
High bar, but a really good chance to beat that high bar.
I mean, hey, look at Zuck. I don't think you'd be throwing out those thirst trap picks if you were going to bomb on earnings. I don't think you know what that means, but that's okay. Thanks, Kevin.
I'm sure I don't.
I don't think we want to. All right, let's go to a story for a big mover on the day. Jenny Horn here with an update out in the newsroom. Our markets correspondent, host of Next Gen. Hey, Globe Life, the company that got just wrecked on the Big Short report, is now 3 days now, like kind of ripping higher. Give us the rundown real quick, Jenny.
Yeah, whipping is a good way to put it. We're up 21.5% now on the week after that short seller report we got in mid-April. I'd say April 11th was first news we got of it, where we heard that basically the company was conducting this internal investigation after the short seller accused them of basically operating a fraudulent company for over 60% of their new business at American Income Life, which is a subsidiary of Globe Life. So that's sort of the rundown of what they're being accused of, but they're refuting this and with conviction. On their first quarter earnings call this week, their CEO mentioned the fact that they're facing this DOJ probe now as a result, said they're hiring this independent law firm to conduct their own review of the assertions in this published bearish thesis. Analysts today are actually saying that given the recent sell-off we've seen, perhaps we're in a better position. I would say fairly positive, all things considered. Keith Brewett was one that upgraded shares to outperform from market perform. Did trim its price target to 110 from 130, but they acknowledged the ongoing risks of these accusations, but feels better given their response on that recent earnings call and their willingness to accelerate and possibly increase buybacks. They do estimate the company's runoff value at
The video
$80
below.
per share in this distress runoff scenario, and assigns about 35% weighting of their valuation purposes, but they still said they see meaningful share value at their current levels. JP Morgan also said that the shares are now pricing in this relatively onerous outcome. So for that reason, they also said that they continue to actually rate shares at an overweight rating, $136 price target, which is well above the average right now, has fallen to around 120 of the analysts covering this name. Truist was one as I'd say maybe the most negative. They cut their price target to $80 a share from $125 with a hold rating, emphasizing actually some things outside of the short report, like their billing and revenue recognition policies, which they actually said make it actually relatively difficult for some of these bad actors to perpetuate fraud. Therefore, they do see the stock still, though, as fairly valued. So maybe this recent sell-off was actually a good thing as far as valuations were concerned. We've fallen 38% from those 52-week highs at over $132 a share, and then now we're up off of those recent lows by 110%. So volatility, is that something you're looking for here? That's definitely been welcome to Globe Life shares.
Yeah, this definitely seems like a great example of that very obnoxious, but I can't resist it, trading adage of if you liked Globe Life at 130, then you're definitely loving it at 39. So it seems like there definitely are some people that liked it at least at 80 bucks. I mean, it's a big, substantial recovery after the market was basically pricing it as like an overnight fraud expose. So at least there's some risk appetite here, I guess, or maybe just confidence, a little battle among the analysts. That's fun to see the analyst community split on cases like this. So thanks, Jenny Horn. Good look here at one of the big movers here to the upside today. Let's get into the economic conversation, how it connects into earnings, with Marta Norton from Morningstar Wealth, the Chief Investment Officer of the Americas, one of my favorite people to talk to here in Chicago. Great to have you here, Marta.
Nice to be here, Oliver.
Last time we were talking about the AI trade-off between kind of macro pressures. The macro pressures have built up a lot, so I guess this week we find out if that AI trade has still got it.
Yeah, I mean, I think it's going to be a big test for a lot of the AI favorites, and of course that's going to continue through May with some of, when earnings come out. But, there's a lot of expectations built into AI, and I think people are looking for those expectations to be fulfilled, at least in Q1 earnings. And I think there's also kind of growing understanding that, yes, there's a value to AI today, but there's also going to be this long tail to it. So it'll be interesting to see what kind of guidance we're getting out of some of these companies.
That's a good way to put it, because that handoff between the immediate rush to grab picks, shovels, land, the hardware that all these companies built up, that's kind of a more overnight sensation from a natural, logical place. They want to build up all these tools, but actually building out the product is a longer tail thing.
Right, the deployment of AI, and really that's a economy-wide consideration. And so how that plays out and how that makes sense to really winners, I think there's still a lot to be seen on that front.
What kind of expectations for big picture earnings then? Does it at least provide us some clarity or some confidence that we've got a support pillar, like we're going to get some good growth for this?
Well, I think as we take a step back and look at the composition of the U.S. market, we know that the market's largest, which includes a lot of these AI favorites, account for about a third of your typical S&P 500 tracker. So goes these big companies, so goes the U.S. market. And so I think as folks get confidence around, how these companies are playing out, I think that has pretty meaningful ramifications for the broader, U.S. stock market, at least in the immediate term.
Is this the most concentrated earnings season ever? Maybe less, maybe around the same as last time?
Well, listen, if we're just looking at pure kind of percentage of market cap in these big companies, we're looking at a percentage that rivals what we saw in the tech bubble, what rivals what we saw in the late 1970s. So this is a very concentrated market. Now that doesn't on its own necessarily mean problems, but it is a risk that I think investors need to manage.
Correct me if I'm wrong, it would seem that if the concentration is at records, at least it was a couple weeks ago, before we kind of really dropped off in NVIDIA. So if we kind of go back to that for a second, that period. If we have the market cap concentration within the index at a record, and there's going to be a lot of companies there that earn a lot less, I would imagine then the earnings representation is skewed even more so.
That's right. That's completely right. Now, one thing that a lot of folks have been talking about, and this is something that we've seen really over the past month, is this broadening out effect. So I'd say there are two factors at play. One, we're seeing dispersion among the top companies. And of course, names like Tesla and others having a very different experience. Yes, in Apple than names like NVIDIA over this kind of year-to-date period. And then, of course, there's also this consideration that just other areas of the economy, namely energy, utilities, materials, some of these other areas have gained some momentum. And so there is the possibility that the market broadens out without necessarily seeing a massive sell-off of these big names, which would be punishing for a lot of the passive investors who are out there.
One of the groups you guys like, from a valuation standpoint, Staples, are actually doing pretty well here.
Yes.
It seems like as long as we're not blowing up in the market. The staples can hang out kind of near unchanged on some of these days until it's like pure risk off, like panic.
You know what's interesting about staples, and this is one of the reasons why we like it. Now, first, from a valuation standpoint, it's one of the more relatively attractive areas of the market. If we just cast our eyes back to last year, staples went nowhere, whereas some of these big tech names really accelerated. But there's also a defensiveness to staples that's really attractive. In fact, if you look at historical periods, staples, even more so than some of the other sectors, has been pretty predictably defensive. And so as we're at this kind of question mark or uncertainty of the market, not only can you get some value, but you can also bolster your portfolio with some measure of defensiveness. Their earnings are a lot more consistent. Revenue profile is pretty consistent. So you're right. It is just kind of a healthy place to be if there's any sort of uncertainty in the market.
A lot of that revenue consistency is in like mid-single digit range, but some of these, just because of inflation alone, are getting kind of high in the single digit revenue range for staples, which is above their average. So I imagine that kind of helps the case.
That helps the case. Now, there is some question, especially as we look at some of these companies that have been able to pass through price increases, that they're going to have to pivot from price increases to volume. And so that will be one of the trickier things for some of these companies to navigate.
Okay, real quick, Mark, the last point is I know you guys have liked the international picture. Bonds creating problems again. Does that even make international look better than they did?
Well,
how does that affect it?
Yeah, on the international front, there's so many different things to consider, namely, the currency, of course, and how strong the dollar's been. But what we like about international is especially kind of those pockets of opportunity. So if we're looking at equities, we're looking at pockets of emerging markets. I know China's a investment that folks love to hate, but there is a lot of value there. And then within fixed income,
now they're 640. Keep going, baby.
More attractive than some of the spreads that we see here at home. So we think there's those pockets of opportunity.
Snake breakout, pull back, boom.
Good stuff, Mark. Fantastic.
To double top.
Your really important week. Seems like a lot is in flux.
Franchise.
So great to have you put it together.
Thanks for having me.
Thank you very much.
Thanks for having me.
Chief Investment Officer of America's at Morningstar Wealth. Coming up, let's talk about the mover of the day. Tesla deserves an afternoon look with the one and only Ross Gerber, who has been a bit of a cynic or a critic, I should say.
Day after day after day after day after day of bashing on Tesla so they can get their General Motors up a little bit and their Ford. They hate it. They just can't stand somebody moving in on their top company. Although he is a big liberal, or was. Now, the good news. Day after day. The one that got me the most was Ford, not Ford, but one of them came out saying that Elon was not going to make the $25,000 car, that you're stuck with paying $60,000 to $80,000 for an EV car. They're pissed off about the price wars. I just think it's funny as can be. I really do. Last night, I'm laying in bed. So I hear on the news, Tesla down on bad earnings. And I'm going, what? I'd never heard them call out Tesla before. Just newscap. Tesla down on bad earnings. Real bad earnings. And I woke me up. I said, what? Damn, I just bought the contract. $63 EMA. $63 EMA. Are you humming? It's the 200 SMA running around. There we go. I think we'll break that. That's not much of a move. 650, baby. Meta mama. Huh? No, they're for all of us. All of us. Put them in here too.
change the approach to owning it? I mean, Ross, is it time to take the profits in the victory lap for as early as you got in, or do you feel for clients you have to stay in based on when they entered? Like, how do you do the calculus on whether or not it's a good trade or investment?
So we've been selling Tesla stock for over a year now. So,
Yeah.
you know, we've more than profited greatly and fortunately sold a lot of stock well over $200. And we originally started around $2.50 a share, $2.50. So it's been one of the best investment returns ever for me and my firm.
I don't doubt that.
Our clients are, you know, we have very close relationships with our clients, and every client has a different opinion about Elon. Most of them hate him and wanted to sell all of their stock, and we have many clients that love him and don't want to sell their stock. What we're telling people is that it needs to fit in your portfolio in a place where it's not going to be a detriment to your long-term savings. And there's a lot of people who are all in on Tesla. And boy, they hate what I'm saying because they bet their whole lives on this, and that is not.
And what were you saying when the stock was at 158 and run to 2200? Were you very bullish on it then, sir, or were you telling them the same crap over and over again? Don't mislead your clients, or you're a fool.
There's going to be a better opportunity to get into Tesla at a lower price over the next year as these troubles continue to mount for Tesla and the robot and the...
Sir, what troubles? I don't like you. I don't like the way you smell. I don't like the way you look.
Until somebody wants to accept that they...
I'm sick of your untils. And look at you. You play music. Oh, you're very talented. Now I'm really pissed off. It's bad enough you play music and that you're on my side of the street. Now you're bad-mouthing Tesla. Woo! Hope we don't meet up in a bar one day.
Somebody calls about something I said that's wrong, and I care.
You do not care.
I'm building a very great business. We've grown tremendously.
Okay. This guy's a... cares as far as I can throw him. One, two, three, resistance. Oh, your dad said, told us boys one morning, he said, I'm going to give you a 5-gallon bucket. And I want you to walk this roadside up by Phelps Grove Park. And I want you to pick up all the golf balls. And if you pick all the golf balls up on that 3-block street, I'll give you $10. So me and Johnny and Jerry and Lisa went out and started grabbing golf balls and went to his dad's house. He didn't give us 20, he gave us 40. He gave us 10 apiece. His dad was great.
Salesforce was named a best-of-breed bison at D.A. Davidson, while the firm maintained a $300 price target on the stock. The analyst noted that Salesforce has a wide moat due to its significant scale and vast number of partnerships. They believe its business will be well-positioned to maintain its current market share. However, at current levels, investors are accurately pricing in its modest revenue growth and margin expansion, in D.A. Davidson's opinion. Earlier this week, it was also reported that Salesforce ended its M&A discussions with Informatica after the two failed to agree on terms. As of mid-April, the negotiations were already in the more advanced stages and could have resulted in one of Salesforce's largest acquisitions ever if successful. Salesforce shares remain up around 2% this week. For more on this story, check out the Schwab Network app or visit schwabnetwork.com.
Well, let's trade some options, look at some action in today's session, and revisit a winner on earnings, Texas Instruments, which is actually doing, I think, some important legwork for the market today, Tom White, keeping chips afloat, or at least close to neutral on the day.
It is, and I think it's a resurgence on basically, oh, I don't have my mic on.
Yeah, that's okay. Talk loud, I can hear you.
Okay, so.
Here you go, Tom.
We might have to do it that way. Yeah, Texas Instruments starting to expand in the automotive industrial sector that, basically.
Come on, give the man the mic.
They haven't been basically doing what they needed to do because they're the widest array of chip maker out there as far as whether it's industrial, Internet of Things, smartphones, chips, moving into AI a little bit. So this was all about guidance moving forward. That's why the stock's a little bit higher here. Now, if you look at where the stock's high's been over the last 2 years, because it's been in a range, it's about $188 a share. And I think that's really key as far as the expectations moving forward and some of the unusual option activity that we saw. Because what stuck out to me was out in the June cycle, the 190 strike call. Traders sold 10,000 of those. Average credit, they collected a credit on these because they're selling out of the money calls, 217. So the break even for this trader, about 192.17 over the next 58 days.
Damn, that thing's flown.
About 10% above the current share price. That's also higher than the 2-year high that we've seen in the stock of about 188. So somebody thinking that we're not going to be able to see, any gains in the stock farther than what
God, it's already had a huge breakout too. No, I think he's already seen a breakout.
Disappointing that somebody is a disbeliever in this optimistic response to earnings.
Oh, it can jump up.
This was a pretty bad report by most standards. Yeah. Like the negatives all over this thing. But see it rally seemed like a really distinct change of pace. So the fact that someone's taking advantage of this to sell it just kind of feels like a little hurtful to a stock that's finally getting some appreciation. Yeah, technically almost a breakout. 175 too, but chart-wise.
Bank of America had a breakout this week
estimates for
to double top.
Period that we're in right now. It's about 3.78 billion they expected. The company came out and said 3.95 billion is what they're guiding for moving forward. So they said on the industrial side, the automotive side, those orders are really starting to pick up. They've gone through all the inventory lag that they've had over the past 4 sessions because Texas Instruments
38.40 triple top
over the last year post earnings. So
I don't know.
Probably
I'll wait.
Either maybe hedging a long stock position, but at the same time they could be saying, okay, it was a pretty decent quarter. Guidance was good. Now show us what you got. We've got some time in this trade, about 58 days. That maybe it's not going to get back above that 190 level.
All right, TXN hater out there. Yeah. All right,
no, double top. It's not a triple top.
Yeah.
My apologies.
I feel like De Niro from Midnight Run. Hey, Tom, why don't you speak into the microphone? All right, a little deep cut there. Great movie. Tom, bullish trades in Amazon left. Let's talk Amazon first.
Amazon first. Earnings next week, and I think that's where they're setting up here for this unusual option activity. You got to remember, the shares are up 72%.
No, it's
All
a triple
these analysts
top.
are coming out because we saw a re-acceleration in AWS growth last quarter. And then also margins were expanding on the retail side, which is pretty surprising because you typically have razor-thin margins. That's where they make a majority of their revenue, but that's not where the profitability comes. And then also, one of the other silos of revenue generation that's really spiking recently has been ad sales. Those were up 27%. year over year last quarter. So this is going to be a big earnings report because expectations are high. We've been talking about high bar, low bar going into earnings. Well, this is a high bar. Down over 1% today. They've got earnings on the 30th next week. Citi came out, raised the price target to 235 from 215. Keeps a buy rating on the shares today. And then they started the new grocery delivery subscription service, $10 a month for Prime members, delivery from Whole Foods, Amazon Fresh, and others. So this will be a key quarter because that bar is so high. And I think traders setting up the small pullback that we've seen from recent highs. They're out in the May 3rd weekly cycle, so 9 days to expiration. You'll capture that earnings event. Trader bought 10,000 of the May 3rd weekly 180 strike calls, average debit of 560. So that break even of 185.60 over the next week and a half is about 5% above the current share price. Call volume more than double what puts are trading today, despite the weakness that we're seeing on a daily chart.
All right, pretty optimistic there. With this chart looking pretty good still. Amazon definitely one of the better looking Mag 7, but still getting dragged today. Last one he got, Lyft. Seems like the optimism has started to cool a little bit, but the market's also dropped pretty hard in the last week. So, you know, Lyft is still a couple weeks away, but given the big pop on the last earnings, it's probably one worth keeping tabs on.
Well, I think this is interesting because the stock's down today and Uber's down today also. On the commentary, that CEO, Elon Musk from Tesla, came out and stated about his robo-taxi and the expectations moving forward, where they're actually going to create a ride-hailing app. That's going to create competition. The stock was down nearly 5% earlier in the session. It's still down today, and it's probably on the back of that news. One of the keys to these ride-hailing services to profitability is
all of a sudden,
we want.
All of a sudden, Tesla has the power. Me, sabano. Oh, change of attitude.
Today, the new CEO has done a good job. Cut about 26% of their workforce. Last year, the stock's up over 64% over the last 12 months. So he's riding the ship a little bit. He wants to get positive free cash flow. That's what happened to Uber. Uber gets in the S&P 500. So he's taken that tack where, hey, we're going to cut expenses and costs, and we're going to get that free cash flow up and try to expand the business and ridership moving forward. But we saw some call buyers in there out in the July cycle. So as you mentioned, earnings aren't until the 7th of May.
7th of May. I was just going to look that up.
Option series, 86 days to expiration. Trader bought over 4,000 of the 17 strike calls for an average debit of 220. So the break even of 1920 over the next 3 months is about 17% above the current share price. So this trader, I think, taking advantage of the pullback that we're seeing with potential down the road of maybe competition from Tesla.
All right. Okay. Well,
that's not a bad idea.
For some of the weakness beyond just the market, it definitely.
That's not a bad idea at all.
This is kind of one of those stocks where when the going gets tough, people bail on it pretty quick.
Yeah.
Lyft has been far from safe haven trade. So.
Yeah. Watch the new.
He say May 7th.
Earnings call from the new CEO because he's been pretty positive for the stock over the last 12 months.
Good point. All right. Thanks, Tom. Coming up, we are going to talk some commodities and look at the China trade. It's actually a really good night in the overnight session for Chinese stocks. Copper's been pretty firm
May
in
2nd.
the commodity realm as crude has pulled back, so we'll take a closer look at those and then give you an update on Snowflake's new AI model. Market seems kind of unimpressed, but
May 7th.
at least it's hanging in there today, up 2% in a down market, so we'll give them some credit for that.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? Hold on.
Neb commercials are kind of cool. I just sat down and watched them. What if? Meta's at 710. Woo! So I'm looking at Lyft earnings. We got a snake, 3 black crows, breakout, pullback, double bottom, spinning top. Now when it's July, come on. God, I tell you what, it just seems like I got a lot on my mind. I could be making a lot of money today. It's just, you got to just take it one at a time, I guess. Oh, I'm not typing good. Damn it. Where in the heck am I? July 19. $17 strike. At 210. So I got Lyft July 19th. $17 strike at 210 for right now for a double bottom. I just got 2 at 210. And then I'll add on if we dip any. Yeah. Lift 63 to 3 black crows. Oh, I know what I was doing wrong. snake breakout, pullback, boom. Jimmy loves this trade. He's up nice. Oh, wow. Ding, ding, ding. So Lyft also had a little inverse head and shoulders today. Just on the intraday. It's a little riskier trade than like Meta. We're going to find out here how much I'm going to make on this. I'm up 125 right now. More than that.
Underlying trend is strong. All right, that's Mike Santoli, of course. Meta, minutes away into OT.
Press the pause button. Stocks taking a breather after a strong start to the week as rates creeped higher today. That's the scorecard on Wall Street, but the action is just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan with John Ford.
Yeah, companies with trillions of dollars in combined market cap are gearing up to report earnings in just moments. Those include
Here we go, baby.
IBM, Ford,
Pay me.
and Chipotle.
Break.
We will bring you all of the key numbers and an
503.98.
exclusive interview with Chipotle CEO Brian Niccol before he talks to Wall Street on the earnings call.
As we await all those earnings, let's bring in our market panel, BD8 Capital Partners CIO Barbara Duran and G Squared Wealth CIO Victoria Green. Welcome to both of you. Victoria, I believe you own IBM, and I'm sure more. This market has been chopping.
Honey, you're a little too high on
What do you
IBM.
need to hear from earnings.
Should
for
took
you to have
profit.
a better sense of your next move.
Yeah, so especially on IBM, it's going to be, can we actually make money on Gen AI? Are we actually
Oh, did I cut you off, honey?
helping clients understand how to implement AI? Everybody likes to talk about AI, but if you're a Fortune 500 company,
Everybody likes to
you're
talk
sitting back
about
saying, how do we implement this? How do we implement this to either save money or expand our revenues? So for us, it's not just talk. At some point, talk needs to translate to money.
You're
IBM,
full
I
of
think, is
shit.
very well positioned for that. You know, we also want to see that Gen AI pick up in Meta. We want to see Gen AI all over the
She says everybody's talking about AI. Everybody's in AI. She's the one that's a little late.
bit of a bump in some of these numbers in Q1.
Barbara, when it comes to Meta, that's a big name that a lot of people are looking for. Do you think that there's still enough upside left given the strong move it's had thus far?
Exactly.
It's a good question because it's really short term versus long term. Longer term, I think there's a lot more upside. I mean, they're 95% of their revenues are advertising, and as we expect, there's been a macro improvement there, and they are really killing it in terms of using AI to find the right opportunities. It's been a couple of years getting it refined, and they are really doing well with both basic Facebook and with Instagram, and now they're starting to monetize Messenger. So I think, everybody's tense about this going in. How much is the stock discounting? Because it's run up a lot this year and over the last year. So we'll see. If it trades down, it's probably a buying opportunity because this is not a one quarter thing. They have really got their costs in line and they've really got the advertising engine going.
Victoria, if I just take a step back here, I mean, we eked out a gain on the S&P 500, albeit barely. It was like a 1-point gain here into the close. NASDAQ, a similar story. The Dow did finish slightly lower. I mean, earnings is really propelling this market, and yet we saw that tug of war with yields moving higher on the back of some stronger data, a weaker auction this afternoon as well. What matters more here to this market, since it does seem like a tug of war?
It is, and I think we can have big names are reporting. We have like 70% of S&P market cap over the next 2 weeks. If we see earnings come in, I think the focus is going to again shift back to fundamentals, company growth, revenue growth, and if earnings growth is there, we could continue to see this market run. Absolutely. You're going to see that push-pull. We've got PCE Friday, that's usually market moving. We've got Fed decision next Wednesday. Typically we'll see what Powell has to say. He took that real...
We've had a 3-week pullback. I'm not going to yell and scream at these guys because now they're calling this 3-week pullback. But I did for 3 weeks when they were trying to keep you in their stocks. We hit the 21 this week and we bounced off the 21. So I'm going to pull this SPY up. I'm going to show you something. Do you see what we got here? What do we got? We got the 9 and we got the 21 EMAs. So this is squeezing. This is held in there. It held in that channel. This is a weekly candlestick. If we stay above the 21 and we even start to break the 9, right now the price on the 9 this is just a rough estimate, 507. So if we can build above 507, we'll shoot to the next resistance level next week at 513. Maybe even a little bit higher, but we're just going to bring that all the way across. So that's about a $6 bounce next week, but we have to hold the 21. The 21 is always going to be a buy spot right now, unless we get nuked. Something happens to Biden, he gets a stroke, and then we got to put that nut as president, Kamala. I can see the mark taken big time. But she'd just be a robot just like him. So it'd be, I mean, yes, sir, no, sir. She has no clue what she's doing up there. So she'll definitely be another puppet. That's what they're looking for. Because the Democrats are right now, who's running the country? It's Hillary and Obama. If you don't think Hillary's in there, she is. She's got a lot to say. What I heard, she had some of her staff members involved in the White House, so they go back and forth. So a lot of this mess we're in right now is part of her fault. That's get nuked. I think we'll still stay above the 21. It takes some pretty good news. Bad earnings. Right now they've been, they forgot about how bad the banks were. No guidance. We pulled back some, so what I'm trying to say. So I'm not going to sit here and argue with them at the resistance levels that we had, because they were just out of control. I mean, some stocks have pulled back quite a bit from that irrational exuberance. So we're squeezing. As long as we stay above the 21 EMA, we're safe. Your price right now on that one is going to be $494, $495, somewhere in that. Maybe just a little bit lower, but not much. We'll just stick $495 for your support level when we come in here Monday, if we have a pullback. Personally, I don't like swinging when you got Putin threatening us with nukes, and you got, Iran and all that going on. There's going to be another big move with Israel into Gaza coming up soon. So, then you had all them earthquakes in Taiwan, floods in China, flood in Dubai, a huge flood in Dubai. You got to see some of the videotapes on that. So I'm going with the geo stuff. That's what they said brought this market back. I don't believe them. I just think it was way overbought. Anybody with common sense would know that. It's still overbought in my book. When they run out of the money, the market will pull back. So, yeah, Tesla trade was great yesterday. I was really pleased to wake up and see that up $1,000. Meta, is that good or bad? I haven't even looked at it. Oh shit. Fuck. Oh God. Well, there goes that. Dadgummit. The revenue was up. Capital expenditures are up huge. AI investment. Well, fuck. Jimmy sucks. No, I didn't get out of Meta. I'm in an option. So it's probably fucked. That's alright. It won't be $580 a contract. I don't know. Come in tomorrow and see. But the expenses are very expensive for this company. 2024 expenses will range from 96 to 99 billion. Infrastructure and legal cost. It's all right. Shoot. That was supposed to be a big thing, too. God. Florida, good exit. Oh, man. Damn it. So we got a 1, 2, 3, maybe. Embrace the Zuck. Okay, well, that sucked. That's all right. That means I got $320 profit on my 2 earning trays. Unless we come in tomorrow and it's up. You never can tell with these people, but it's definitely took a hard hit. Oh, gosh. Oh, that's sad. Yeah, it's taking not good. Okay. Catch y'all later. Sales beat. Yeah, it might bounce during the call.